version now, remember that?
Oh, that's right, EDGEFINDER Webull. Yeah.
That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh that's right, EDGEFINDER Webull. Yeah.
That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version.
Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our EDGEFINDER summer sale is now live. Get 50% off all of our tools like Commitment of Traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year.
Hello. So straight off, you could probably tell I'm not Nick. I'm filling in for Nick at the moment. How are you all doing? Everyone doing okay? Heading towards the end of the week now. It's hump day. So we can start off with gold. There's actually looking quite nice to go long on gold now. Yeah, the intro is good, isn't it? It needs whoever made the green screen, whoever edited that needs a raise. So we had what was it? ADP this morning. So, well, actually this afternoon, I guess. Came out lower than expected, quite significantly, actually. We came out at 150K. Consensus was 160, previous was 157. So really undershot ADP, which ADP can be used as an indicator for NFP, but not in every case. It's not like ADP is negative, NFP will be negative. It's more just a sort of guideline or rough guidance. So if we look at the dollar, we've had a really nice sell-off on the dollar index. We're now coming into this level of support here. So it's looking very, very good, actually. So gold long is starting to pique my interest again. So I've been bullish on gold for quite some time now, but I have not really executed anything for the past week to 2 weeks. However, if we look at the previous weekly candle, really, really nice sort of, I think these are called dojis or hammers. I don't know the candlestick terms, but it's, yeah, reacted really nicely off the support once again. So a weekly hold there. On the H4, we've broken out now of this downwards trend. So thanks to ADP. So if this can hold, if we can continue this bullish momentum, it might be a good sign to get in. The only thing holding me back now on gold is NFP on Friday. We also have the UK elections coming tomorrow. So I'm not sure how the UK elections will affect gold. I'm not sure if it will or not. But yeah, it's something to worth keeping in mind. Hey Nick, enjoy wherever you're traveling to. Have a safe flight. So on the topic of the UK elections, I assume the majority of you guys aren't in the UK, but it's still, if you're a trader, you still need to understand the UK elections. You need to know about the pound, especially if you trade GBP. So Labour's in the lead at the minute. This is the polls. So yeah, tomorrow we'll have the final results. But yeah, Labour's in the lead by 40%. Conservatives dropped heavily. So you can see, obviously, Conservative was in the lead, and we've just seen it collapse. The public perception of Conservatives have gone really downhill. Reform is Reform's kind of the backup. So Reform is essentially Conservative. They're kind of the same thing. Or their ideals are sort of similar. So we're seeing a lot of Conservative voters move over to Reform, but it doesn't seem to be making much of a difference. It seems like we're going to get a Labour government. So what that means for the market is two things, in my book anyway. I'm not trying to sort of predict it, of course, but it's good to get sort of a guideline for yourself on what you could expect. So if Labour is going to win, we could see a bullish pound. And the reason is because the Tories or the Conservatives have had a very, very rough time over the past, I think it's 14 years that they've been in power, or in, being the government of the UK. We've seen a lot of problems. It was Boris Johnson that was voted in. Then he was kicked out with, I want to say it's Theresa May. It's not Theresa May. It was, I forgot their name. That's really bad. Liz Truss, that brought in the mini budget. That was terrible. Then she was kicked. Well, she left. Then it was Rishi Sunak. So we had two prime ministers that no one voted for, apart from the insiders of the Conservatives. So that really hurt their image. So when Labour come in, there's, the manifesto is saying that they're going to fix Brexit trade deals. Things will get better. Perception will get better anyway. The hope of the economy will increase. So it makes sense that we would see a stronger pound. However, having said that, I am still very, very bearish on the pound over the long term. Labour may bring hope back, yes, but they're not going to fix the problems. They're not going to fix the huge inequality. They're not going to fix the huge cost of living crisis, the energy problem. These are just things they're not going to do. So yes, we might see some pound bullishness over sort of the mid to short term, over maybe a couple of months' time. However, over the long term, over the next sort of couple of years, I really don't see the pound performing very well at all. And feel free to, quote me on that in a year's time, 2 years' time, and we can see. But that's just my opinion. I could be wrong, You only see my trading view window. Oh, sorry, I must have shared the wrong screen. Let me just pull that back for you. There we go. I need to share the entire window, that's why. So these are the general elections I was talking about, but we'll move on. I don't want to bore you guys too much with that. Pound's been bullish against the yen for 4 years. Yes, but that doesn't mean much. The majority of assets are bullish against the yen. So if we look at the currency strength, just look at the yen. We can put this onto a weekly time frame. The yen seriously underperforming, really, especially sort of since 2014. We can see it's just been sort of a lagging currency. It's underperformed at almost everything. So to say that the pound has been overperforming it, it's doesn't mean much in my book. Hey, change background. Not sure what you mean by change background. Do you mean my physical background or the chart background or what? EU thoughts. So EU is, let me pull up EU. So I'm shifting slightly bullish for now because the Fed sounded quite dovish. So I'm looking to go long. The European sort of weakness, or the euro weakness we saw, let me pull up my brush tool, wherever that is. Here. The weakness we saw during this period when we were seeing huge issues with the France politicians, it was just, or France politics, it was, quite a strange situation to be in, because there was no clear signs that it was going to reverse or that things would get better. It was more just a case of it slowed down and it's now gradually getting better. So that's kind of what we're seeing now, along with the dovish Fed. So it makes sense for a bullish euro dollar. However, we do also have potential Fed cuts coming in. I think it's November, September time, roughly. I don't think there's a set date as far as I know, but yeah, it's something to keep in mind. So it wouldn't surprise me if we do see a higher euro dollar for now, and then we could, sorry, I shouldn't speak on behalf of you guys, but I will be looking to go short towards the end of 2024 and hold a short position into sort of 2025. So these are the three areas of interest for me. I'm not going to try and time the market. Obviously, I'm not going to try and time a pullback on one of these levels. I'm just going to watch them, and whichever one shows the most strength, I might end up with 2 losers, 1 winner, or immediate win. We'll see. Where is Nick? Well, Nick's on a plane or at the airport, so it sounds like he's going on holiday. I'm not sure where to. But yeah, I'll try and fill in as best as I can. I know you guys love Nick. Why do you use MA? So moving averages are great for trend direction. So let's pull up, well, actually, we can stay on here. So let's have a look at the euro dollar on the daily. So I used 8 and 21 here, and these give me the immediate trend. So you can see we've got a downtrend here with the red above the green. So when the daily's bullish or bearish, that's the trend I follow. And then I look on sort of the hourly or the 4 hours, and I wait for the 200 and the 50 EMAs to be in the same direction, and that would give me a chance to go long. So you can see, oops, sorry about that. When I took my short position here, the daily MAs were bearish, the hourly MAs were bearish, we had a pullback, RSI was overbought, we had a bearish engulfing candle on the 200 moving average. So it's just good for trend direction and sort of following the markets, really. Gold. I just covered gold. If you want to hear gold, you can go back to the start of the stream. Is the Forex market open on the 4th of July? Honestly, yes, technically it's open. However, it's not a day worth trading. We have UK elections, and we also have obviously the 4th of July in the US. So it's going to be, yeah, not the best trading day. So I would stay away from tomorrow personally. Can you take a look at US 30? I'm glad someone brought up US 30. That makes me really happy. And I'll show you why right now. So some of you guys may know, some may not. I bought a funding challenge, and because of my trading style, I've never passed a funding challenge. I think I've tried maybe 3 or 4 throughout my trading career. But today I took a trade on Dow, basically just a resistance sell, very, very simple. And past phase 2, so I'm just now waiting to get my live account. So that's a nice little birthday present for me. What time frame are we on? DH1. So yeah, it was just at these sort of triple tops. We had a huge push during the London session. Saw a little bit of extra exhaustion with this wick, so I entered straight away and just rode this. Obviously, it was a very small move on the hourly time frame, but I took it on the 5 minutes, so that was quite nice. But we can move on. I've been looking at Dow for a long time. It's one of these markets where technically, and I don't mean technically as in like the technical analysis, I just mean technically in general, it does line up with my entry strategy. It's just not that clean. So in hindsight, obviously I could have entered, I could have had 3 chances to get into this market, but I just didn't. I just wasn't overly happy. And one of the reasons actually is because if we take a look at the EDGEFINDER, look on the COT sentiment or COT data, Dow is the 2nd most shorted asset, just behind the Nikkei. So that was one thing that really put me off, and it's one of the reasons I'm not too upset that I've sort of missed this bullish move, because it would have sort of gone against our strategy anyway. Happy birthday. My birthday is on the 7th of July, so it's not actually today, but it's close enough. It's all good. But yeah, thank you. Yeah, cancers unite. Trading the yen. What strategy do you trade? Cute kittens. If you want to see my strategy, there's a free video on the Elite Traders website. Again, yeah, 100% free. There's no paywall. I don't want your email or anything. It's 20 minutes. You can go ahead and watch that if you want. So you're on a trade on gold. Should I close? Well, that's, what does your plan say? If you're coming onto a live stream and asking a stranger if you should close your position, I don't have your stop loss, don't know your entry, your target, time frame, you probably need to head back to the drawing board and have a look at your plan with the management strategy. If we see PMI coming out lower than forecast, XAU will go up or gold will go up. Yes, so we actually have ISM services in 18 minutes. So I'm not sure if I'll be here for ISM with you guys. I'm not sure if there'll be the next guest coming on. But if I am, then we can definitely watch that together and we can have a look at the reaction. Your TP is at 2370. Okay, I'll take a look in a minute. Let me just have a look, see if there's any other messages. Why do you say that? Because of your trading style, you don't pass prop firm challenges. So my trading style is much more long-term. And I have very, very strict personal rules that just don't work on prop firms. So, for example, because I'm a swing trader, I need to hold trades on weekends. And back in the day, if you guys have been here for a couple of years, you'll know that you would have like 30 days to pass FTMO. You couldn't hold trades over the weekend. And I can't remember, but there was lots of rules that were just really anti-swing trading. So that was basically the main reason. And then when they got rid of sort of some of the more difficult rules as a swing trader, I sort of tried to pass with scalping and day trading. At that time, I couldn't scalp. I've never scalped before. Like I said, I'm a long-term trader. So that would lead me to blow in some challenges and things. But luckily now, prop firms are a lot more friendly towards swing trading. You can, well, with the majority of firms, you can hold over weekends. So it makes it a lot easier for me. USD CHF is a sell. That's a very bold claim to make. Oh, sorry, a sell for the day. Yeah, that would make more sense. USD CHF, we can take a look. Okay, so I'm not in this trade, by the way, just to clear that up. Yeah, it doesn't look bad to go short. However, personally, it wouldn't work for me. Potentially, if we got a daily bearish close, so you can see the current daily candle is now engulfing the previous day. So if the daily candle can close basically how it is, or even lower, then that could potentially set up a short position if that's what you want to look for. If you are looking for a longer term position on this type of, on the dollar Swiss. However, you said on the day, so let's see. So for me, that doesn't line up. I'd be looking to go long off sort of the 200 moving average, but I can understand why you want to short, especially due to the news. Makes a lot of sense. You use your own funds? Yeah, I do use my own funds, but why would I say no to more money? If I can get an extra 100K under my belt, why would I say no? Because all I did was copy my real trades onto the challenge account, and that's it. It's not too difficult. It doesn't take too much time. Is there a time limit for completing phase 1 and 2 on funded accounts? No, not really. If you have a firm that's giving you a time limit, you should probably go elsewhere. Dollar yen, for sure. So the dollar yen is steaming ahead. It's rocketing. So I am kind of waiting for intervention, to be honest. So if we look, the previous major intervention was at 160. So we've broken past this, and the dollar yen is now at all-time highs again, and it's creating all-time highs as it moves upwards, obviously. So I'm looking for a potential move of around 3% with an intervention. So yes, so if we look at, sorry, let me just make this a bit more clear for you. So if we look here at this move, this was the intervention by the MOF, which is the Ministry of Finance in Japan. This was a 3.5% move to the downside. And this, as far as I'm aware, off the top of my head, this was the largest intervention they've done in quite a while. So it wouldn't surprise me if we saw another large one. Don't forget the MOF have a large amount of money to throw into interventions. And interventions aren't meant to change the direction of the yen. And this is a big thing I've kind of seen this on social media, people saying that, or people being so scared of interventions. So for me, an intervention just allows you another entry or an entry opportunity. So let me just pull up the brush. So an intervention will push price down, obviously, because it's putting money into the yen. It's giving the yen some strength. But it's not made, interventions aren't designed and they're not done to then suddenly change the trend of the yen. That's not how it works. They're just meant to slow down the depreciation against the dollar yen or against whatever else. So it's just made to, slow things down. And at this point, when it does sort of reach the peak of sort of the downwards move, that's when I would look to enter and continue long. So in this position here, I took a long position. I can't remember where exactly. It was somewhere around here, and then closed out at this, this sort of daily previous candle around here. Hit take profit, entered again here, and again. It was two very profitable trades just from getting in on the intervention pullback and not being scared of it. So that's how I would play it, because at the moment there's no chance I'd be trading trying to buy into this or even sell into it. Really, really bad idea, in my opinion, of course. What time frame do you use to do your trading style? Any. So generally speaking, if I'm looking for a swing trade, the weekly, the daily, and the H4. However, I do day trade a lot. So I'll look at all four charts. So weekly, daily, 4 hours, and 1 hour. And they all have to align for me to take a trade, really. What's your thoughts on funding pips and funded next? I don't know. Funding pips, I don't really know much about them. I'm not too happy about certain aspects of that, but yeah, I don't feel comfortable discussing that too much on someone else's channel, because I don't want, repercussions and things. But ask me that on my personal accounts, and I'll tell you the truth. Israel killed Hezbollah commander. Any possible impacts? No, I don't think so. It depends, actually. That could scale into something much worse. We could, if it does expand, investors get scared. We could see the price of gold increase, but to be honest, I think not really. Where is Nick? Nick's on holiday. How long do you hold your trades? As long as I need to. So for example, I've got a trade here on Jet2. So this is a position trade. I've been in this since the start of the year. And I'm, still holding in drawdown. So I'm happy to hold trades for years if it really needs it. However, I assume you mean more day-to-day stuff. It would be generally 1 to 2 weeks. So this is a trade I took live on one of Trading Extremes, actually. And unfortunately, it's not worked out. It's kind of just heading to stop loss. But, I've been in this for 20th of June. Yeah, so about 2 weeks, almost, roughly. So I'm looking to get out of this at break even now, if the opportunity arises. But yeah, I really, really like gold. I am in a silver long position, which is in quite nice profit now. But unfortunately, I can't show you that one yet, just some business reasons. But yeah, I think I'll be looking to go long on gold next week. The problem is price is now too high. I don't want to enter here. I don't want to enter here, and then for whether it could be anything. It could be NFP that comes out negative, or sorry, positive for the dollar, and then price comes back down to this support and then pushes up. When if I was just a bit more patient, I could enter on this support, and that would be ideal. So I'm kind of stuck in the middle ground. I have been stuck in the middle ground on gold for a long time, but I do like the fact it's broken out this this trend line. I think that's quite a great sign for gold. So what we could also do is wait for ADP to sort of have its correction. Now, this isn't always a guarantee. However, sometimes with news, we will have the initial impact and then we'll have a correction back to sort of the fair price, or the, I want to say real price, but that's not a correct way to say it. But back to where price was before the news came out, and then a continuation in the direction the market wants to go to. And if we do see that, then that could present an entry opportunity. But again, because of NFP, if that did happen, it'd be half risk, so 0.5 or 1%. Pound New Zealand. Yeah, we can take a look at Pound New Zealand. So again, this is quite I guess a boring one. I'm really sorry, guys, but because we have quite a busy week going forwards, my personal my personal portfolio is pretty flat. I'm not opening any trades at all, especially on the pound and especially on the dollar. So Pound New Zealand overall would make sense to go to the upside. I mean, the New Zealand isn't a great currency anyway. It's seen a little bit of strength recently, but overall it's still pretty poor. It's technically in I can't remember the term. It's technically in a recession, but yeah, there's a specific term that or wording that the New Zealand dollar's in. I can't quite think of at the moment. But yeah, so especially if Labour is elected as the new government of the United Kingdom, then I would be more than happy to start looking for a long position. And I quite like this sort of setup here. Let me just see. So yeah, we've got nice resistance level here. I'd be quite happy to see a pullback, sort of a break and retest of this level, and then just a continuation to the upside. But of course, that's assuming everything goes well. But anything could happen. Like I said, it's the elections. We don't know. We don't know for sure. EUR USD. Bro, guide us on the next USD news. Don't trade it. That's all I can give you. I can't guide you really because I don't know what it's going to be. So it's in 6 minutes. ADP was negative. This is forecasted, or consensus is lower than previous. So it will be interesting to see, but I don't want to sit here and say, buy gold, buy anything, weak for the dollar, because there are people out there that will take that literally and start trying to trade it. And then, they'll blame me or they'll blame Nick for a potential loss or whatever. So not worth the hassle, but we can definitely watch the result together if I'm still here. AUD CHF. Yep. Oh. So I made some good money on AUD CHF actually. So this was the position that we took. So we overall, I think we gained just under 4%, obviously accounting for personal risk, but yeah, we gained around 4% off these trades. So we hit our take profit here, or we closed out here, and then we scaled in again once we saw the bullish push. But yeah, it was because the RBA is very hawkish. The Australian dollar is doing very, very well at the minute. It's one of the strongest currencies. Yeah, in fact, it is the strongest currency at the moment. You can see it right at the top here. So I would only be looking to go long here, but of course, we'd need to see some sort of pullback. We are at a nice level of sort of resistance here. So I'll get rid of that. Let me just clear up this chart a little bit. So I would quite like a pullback, obviously, because this is, I don't want to be buying when it's high. I don't want to sell when it's low. So it makes sense in my book to look for some sort of long position around this 50% pullback mark. So potentially around here, and then take it back, or take it up to sort of the fib extension level. Actually, this fib level lines up really, really nicely with this high over here at sort of the 6.615 level. So this could be a really, really nice play. However, I think this is very optimistic. I think we won't get such a strong pullback because there's nothing to drive that type of pullback on the H4. So realistically, I'd be looking more for a very typical bread and butter break and retest. We wait for this break, we enter on this retest, and then we take it sort of back up like this. So that's kind of the only way I would see this as a valid setup, because it's similar to sort of the yen pairs at the minute. It's just steaming up. We're not seeing much of a pullback or entry opportunity here. So yeah, that's my view. Yep. So ADJPY is the best currency at the moment, in my opinion, or the best pair. Just because obviously yen is so weak, the Australian dollar is very, very strong. So this is kind of the no-brainer trade. What I mean by no-brainer is, if we take what trading is at face value, is we want to buy the strongest currency, ignore that arrow, buy the strongest currency, sell the weakest currency. And the Australian yen is this personified. So the Australian is the strongest, the yen is the weakest. So it's the most obvious trade to be trying to get into anyway. But actually getting in is kind of the problem. Is, you know, what I've been saying before, is that I would need to see an intervention by the MOF, because at the moment it's too high, it's too expensive. And, you know, buying right now, let's see, you know, we need a stop there. Where's your target? You know, why? It just seems way too high up to buy for me. But yeah, direction is only buys for me. Guys, for people that keep asking where Nick is, he's on holiday, as far as I'm aware. So he'll be back at some point. Nick is better than me. Yeah, I'm sure he is. He's been doing this a lot longer than me. I'm pretty new to being in the, public thing. Hey, James, what funding company did you choose? I'm based in the UK. I'm with Maven at the moment. Why are you showing hates? It's all good, man. It doesn't bother me. Pound, dollar. So we've already covered pound dollar, but I think we could take another look. So my idea on pound dollar is more waiting for tomorrow's election. It's just, I don't really want to touch pound at the moment. We can already see it's pretty overbought if we're looking at the RSI. So ignoring the election, which obviously I don't think is a good idea, but just on a technical basis, I would want to see a pullback to this level of support and a continuation to the upside. And then, speaking in an ideal world, this would be where Labour is elected and we do see sort of an initial push to the upside with, investor hope in the pound. Pound CAD. Sorry, Jason, I've seen you type that. I completely missed it. So we are long on pound CAD. We are short on pound CAD. And I can give you the reasons for that. Maybe I think I'm coming back later today on the stream, so I can give you a better insight into the economics behind it, because it's not my trade. It's one of my traders' positions. But yeah, we are in short on this one. However, short term, it wouldn't surprise me if we do see the bullish push, as I was saying. Guys, I appreciate the nice comments, but honestly, don't worry about me. I'm here to do my job, reply to you guys' comments, and give insights. There are other guests on the show, so if you don't like me, tune in another 5 or 10 minutes, and there'll be someone else here. So let me see. Talk about gold. We've covered gold quite a lot, Manuel. Feel free to rewind the stream. BTC. So Bitcoin is interesting. Sorry, just give me 1 second. Just need to check something. Okay. So yeah, Bitcoin is interesting. Let me see here. I know Nick's long, and I really like the position Nick's in. However, I can't trade it on the broker I'm on at the moment. And all my current crypto is actually already taken. So already allocated in other areas. So not really got any capital to allocate into a long position, but I really like it. So this 4-hour candle is actually quite crucial because it's forming bullish off this really strong level of support. If it can close bullish engulfing, that would be my sign to potentially go long here. Stop below this low here, just in case it needs to be tested again. So yeah, this would be how I'd play it. And to be honest, with crypto and the way Bitcoin has moved over, its history, I would be very tempted to just not have a take profits on this. It's basically the same way Nick trades. So, I can't give you any new insights, but yeah, it would be a case of just trailing stops up, because Bitcoin is obviously, it's essentially kind of like US 30 or gold. It kind of drifts to the upside, and we do have large pullbacks. It's very volatile, don't get me wrong, but I wouldn't be opposed to just holding this position until a trailing stop is hit. Oh, PMI, sorry guys. Yeah, PMI, let's have a look. So we got 48.8. Deviation is negative 1.87. Came out worse than consensus, worse than previous. So it's pretty bad day for the dollar, actually. Very, very nice. And the reason I'm saying it's nice is because I am short dollar. I'm long on silver. So let's just take a quick look at gold, see how gold's reacted off that. Yeah, it's steaming ahead. Really nice. So let's see. So we've had a 1.3% gain on gold since ISM and ADP. So yeah, really nice. So if you are short gold, you probably have made some money. Dollar is sinking. Damn it. I assume you're long on the dollar. That's unfortunate. I'm sorry for you. Gold bought. Gold up. Yep. We can see gold has moved really nicely. It's just got this next resistance to break through. If gold can break through this, it wouldn't surprise me if we then start heading back up to the previous highs at the 24.5 level. Okay, so guys, we've got a new guest, I think. I'm not sure of the time zone difference. Let me just double check. 12 EST in London. Okay, cool. Yeah, so you guys have a new guest. I think it's Chris. So I will see you guys later. So for the guys that don't like me, you are going to be happy now. So I'll see you guys very, very soon. I think I'm back on tonight. So yeah, have a great day, guys. I'll see you soon.
Our summer software sale is happening right now, which means you can get the EDGEFINDER for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The EDGEFINDER is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the EDGEFINDER software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
What's happening, everybody? Happy Wednesday. Everybody be nice to James. He does a great job. All the guests that come on to the A1 Trading Team show does a great job. We're here to help. At the end of the day, we're here to help. We're traders just like you, and we just want to make some money. So all good. Let's get cracking. We're take a look at the SPY. This is a 5-minute chart. I have green and red shaded in the background. That is my weekly direction. So we are bullish for the week so far because we had a solid day yesterday. I did take a screenshot of this morning. I think this is something to note. So I know the numbers might be a little bit smaller here, but the advance decline yesterday was pretty substantial for the bulls. The advancements yesterday, 61.8% of the stock market was up in green, while 34% was down. So there's a little sliver there unchanged. Now, that was good. You can see in the heat map here, it's small, but NVIDIA didn't lead the way. We'll take a look at that price in a moment, but you had some pretty solid plays. Microsoft held green, Adobe was up, Apple's up, Amazon's up. Tesla was a big one, over 10% yesterday. on the day. Google is up, Meta's up. A lot of the financial stocks, big one, Visa, JP Morgan, Bank of America, all up. A lot of green in the financial sector. Some interesting ones. Eli Lilly, Ozempic can do no wrong. It's been one of these rocket stocks as well for the year. Eli Lilly was down. ABBV was down. So healthcare down. But like I said, advanced decline line, market breadth, a little bit more exciting to see that it's not just being carried by 3 stocks. So there could be some traction here. There could be some follow through here. If you don't know this, the market's going to be closed today at 1 p.m. So equities closes up. The 0 DTE for today on the SPY or the SPX or the Qs or whatever you're trading, that 0 DTE expires at 1 p.m. today. I am not taking any 0 DTEs just because it could be a little bit wild and crazy. I know that we're going to have some extra content for you today. We have FOMC minutes at 2 p.m. Eastern time. So stuff to watch for sure. And this is what I'm watching. So, I'm going to keep this really simple. Okay. I mentioned this morning in my trading room that, let me go to the SPX. Maybe it's a little bit cleaner here. All right. So SPX, I put a line on my chart right here. So we have resistance. Okay. And then I've connected right here. So we have 2 resistance points that into the future, we're pretty much sitting at them right now. And as much as we might want to get bearish, okay, as much as we feel that the market might topple over, look, anything can happen. But I do believe that in order for us to get bearish, price has to prove it. And in order to prove it, price has to get below this 542.47 low. That would take out the low from 1, 2, 3 weeks. That also bring in this CPI gap from a couple weeks back. And that would potentially breach. We'll move this structure up here. Let me change this chart alarm. I'm going to move this up. I'm going to move that chart alarm right there to below the lows. So if we take out those lows, we have a lot of indecision. We keep testing. I just saw a note that the NASDAQ has advanced to, I think, all-time highs. So I'll check that here in just a moment. Let me go QQQ. And there you have it. NASDAQ breaches all-time highs. Again, market's going to get all excited from a directional yesterday. It doesn't mean it's going to keep going right now. I mean, we could poke the highs and we could stall, but it does mean with a high probability that we're probably not coming back to this week's low, and we're probably not coming back to that low either. So that being said, I could look at a trade here on the NDX at 20,035, and I have a bunch of broken wing butterflies and credit spreads, and I'm out of the way on these. We did breach the highs, which means from last week's high low, if I could get a position here at 19,474 on the NDX, 19,474. Let me see something here. So if I went out to Friday, which is going to be the 5th, 19,474 is a long ways away. I doubt that I'm going to get any credit for that. If you see a beast walking around in the background, that is my dog. It looks like we have some renovations going on, but I bought a new workstation, and I've got to wait maybe next week my new tower shows up. So I'm just working on a laptop this morning with the TV monitor plugged in. So I apologize, there's not the usual setup. But what you should be able to see is comments are running, so you can see yourself live in the stream. Cool. Get a shout out. Get your 15 minutes of fame. But if you see my dog walking behind me, he's just tightrope walking on the back of the couch. And if it sounds like I'm snoring, it's not me, it's him. All right. I was going to look at a trade potentially if I can get anything for it, even though I'm going like literally 500 points out of the money. I doubt it's going to be something good. So let's find out. If I put in let's just go a vertical spread. So long put vertical. And let's move this way down there to 19.4, 19.5. Doubtful this is going to be anything that I want, but let's see. So what I say the lowest from last week, 19.472. If I did a 19.475 by 19.470, ladies and gentlemen, I can take on $497 risk and I can take $3 profit. after commissions, it's obviously not a trade I'm going to take. If I wanted to add another leg to this, let me add on the sell side. Let's flop this. Okay, if I pin this at 47 or 475, pin this and then add another leg to this. Now let me sell that 475 twice. So that's still a terrible trade. I get 5 cents credit, which is not worth it, especially on 4 legs for the option trade. But it does give me a butterfly trade. I'm probably better off doing something like this. Not going out 2 days, not going out next week, probably going out further. So let me take a look at NDX and we'll talk. I just want to walk through the SPX for a second. We're sitting here at highs. We said this last week, you know, going into July, usually the first 2 weeks of July are historically bullish months. You know, so I'm looking at about $12,000 in profit today. P&L is looking pretty solid, taking some profit, putting on some protection. If I go out, let's say to, let's see, I could go out 50 days here towards the August 23rd. Let me see how far out I can go on some of these trades and position for this. So how far out could I go and make this worth my while? These are all broken butterflies that have been profitable. That should be fine. I want to see if I did a debit spread. Current price is around 20,026. If I started a debit spread at maybe like a 25 delta. So I would buy, let's say I buy the 19.4. And then I would sell, let's go 50 points wide. So if I go from 19.4 to 19.350, that's going to cost me $10 to take that debit spread. Now, what I need to look for is, can I add another sell put or another synthetic spread to still take in credit on the trade, but give me a big window for this trade? So give me 1 second to kind of construct this. I'd like to pay a little bit less if I could. I went to a 25, 26 delta. Maybe I can do this. Let's slide these down a little bit. So at 19,350 by 19,300, pay just under $10 for that debit. That's a 25 delta. If I go down even further, let's say I go to a 20 delta. So now I would buy the 19,100, sell the 19,050. Now I'm paying $750 for that. Okay, not bad, not bad. Now I'm going to finance this. That's my point. So this is going to be a $750 debit. If I add in another spread, let me see how far out I can go and put in another spread. So if I went from 19,050, where's that in price? 19,050, you can see is not that far away from current price. 19,050 is right around here. That'd be about a 4.7% correction. Now I want to go as far out as I can, maybe something around this 18.5 zone, and see if I can still create a credit here. 18,500. Okay. Now, I'm obviously not going to take the trade and tie up $250,000 of buying power. But what I could do is, can I take this as a debit spread, or I'm sorry, credit spread, and get this to still pay me a credit? All right. So it's possible. There's some risk on the trade. There's some reward on the trade. Does anyone want to see what this trade looks like on a risk graph? So now I can go all the way down to 18.5, and 18.5 is over here. So from this level all the way down to 18.5, I would be, in this for about a 7 to 8% correction. I'd still be able to grab some profit. Now, I'm obviously not excited about this trade making 50 cents. The goal is I want to try to collect a decent premium. And I mean, I don't know. It's an expensive instrument, so I got to be pretty careful on this. My max loss, that's about 2.5% of my account. That's about as much as I'm willing to risk on the trade. But I'm not willing to do it for that little amount of credit. I'm not doing it for a break even, So anyway, I'll play around with it a little bit more. See some requests. No, I'm not short. What I'm looking at is doing this. So here are my thoughts. Okay. I'm not short the US equities market. Okay. I'm not short, but to play defense, to protect my portfolio, I want to build trades that allow me to profit from a sell-off. But if price goes sideways, okay, we'll just say this, sideways, down slightly, okay, up, or up a lot, I still make money, right? That's what I want, because I get it. I'm looking at the same charts you are. This market is overbought. It's overstretched. It's ridiculous, but it's not impossible to see it go higher, right? Right now, look, we've got holiday disruption tomorrow with no U.S. equities market. Brokers are closing early today at 1 p.m. Non-farm payroll on Friday. It's going to be a low volume week. I just think we need to be aware of what is happening, okay? Right now, the easiest thing that I see here is this market is stuck in a range. The high is at 550 on the SPY. The low is at 542.50, okay? The NDX or the NQs, I can do the same thing on the NQ. Let me go here. There. Look at the NQ. I'll go back to the last week of trading. Maybe this is easier if I just do QQQ and then NDX. So the last couple of weeks, we've seen more volatility out of the Qs or the tech world than we have in the SPY. Last week we started lower, ripped all the way back to all-time highs, then faded on Friday. This week we had a big directional day. Tuesday we broke all-time highs again today. Look, the CPI gap is still here. Okay, so yes, like a hedge. It is like a hedge. And I said this I think yesterday on the show. Hedging is important. Okay, diversification is important. But also steady trading and consistent profit taking is important. If I am generating income with trades that allow me to collect, take off profit. Here's a good example, okay? Tesla. Okay, Tesla is absolutely freaking ripping right now. I mean, this thing is up a ton. Tesla's up 29% since the middle of what? End of June? We're talking like maybe in the last 2 weeks. That is ridiculous. Now, I have a Tesla position. I've got a credit in here for $5.60. Okay, I have a ratio spread in here that was $1.22. I had an earnings play that was $10.70 turned into $13. Let me show you what I have here on Tesla. So the stock is ripping, right? Tesla, I have a ratio spread with the 130 by 115. Now, it is unlikely that that's going to be assigned. I did a ratio spread here, collected an extra $1.22. Right now, that $1.22, now I can sit and wait until the end of December to grab an extra 30 cents of credit. Or, and here's what I'll probably do. I collected $1.22 on the trade. I'm up basically 90 cents right now of profit. Okay, 90 cents out of $1.32 or $1.22 rather. So 90 cents divided by $1.22. I'm already up 74% of the profit in like 2 weeks. Okay, from capital efficiency standpoint, it is probably better for me just to take this profit and reestablish the trade. The issue that I see here, though, is if I reestablish the trade at this rip, I'm going to be way more in the way, right? I mean, when I was putting on the position, it was when Tesla was questionable. Does anybody want to own Tesla? How's it looking? Tesla, blah, blah, blah. It's going to be this big problem. I don't know, you know? And so if I put it in here and I've got it at 115, it's like I did it so I could own Tesla at a price that I want to own it. So anyway, I'm up about 74% of the profit on this trade. If I look at my 560 or my 560 put that I put on right here was at, I went out to June of next year. I did a leap and I did a naked put at 115. This trade is probably, so from a 560 credit, it's already decayed about $1.80 already. Now I'd like to take more profit out of that if I can. So it's already up a decent amount, $1.80 out of a max of 560. $1.80 out of a max of 560. So this is up 32% right now. If I want to grab the profit between these two contracts, I could grab $1.80 plus another 90 cents. I mean, I'm grabbing roughly $2.70 credit in the last 2 weeks. But where I'm positioned on this, I mean, if I'm going to make a decision and time is not of the essence here, it's like time's on my side as a seller, right? So I do want to own Tesla cheap. If I sit in this trade longer, you know, it is tying up some capital. That's the one thing I'm thinking about is, you know, 560, that's going to tie up around $4,000 to $5,000 of buying power. I can allocate that capital again, okay? But I also know, like, if I want to just hang on to this, that is almost $7 of credit that I can collect over the next maybe 6 months. So that to me is kind of worth hanging on to it at a price where I'd be really happy to own Tesla, you know, at $100. So for hedging, you know, it's not just this. Like the hedge would be, I'm just going to put an out of the money put on the SPY, put an out of the money put on the SPX, and just go nuts and have it be dirt cheap. Here's an example. Okay. Hedging is important. Okay. I think it's important if the market is going to fail and not cooperate. And if you've never experienced this, by the way, if you are not properly diversified, if you're not properly hedged, if you're not properly playing the game of defense or having some protection, you know, that little correction in 2023 hurts, right? This correction that we had, which is obviously way worse in 2022, hurts way more. Okay. So for traders that struggled in 2022, in order to avoid that struggle, you got to have some non-correlated assets, right? So, I mean, Nick has talked about it this last week. You know, he's long in technology with XLK. He's long in XLE. Those are completely different sectors performance-wise. My camera's all weird. Sorry about that. I'm trying to get the right angle for y'all. But it's very different sectors, right? If financials, like financials, another one. If you did like XLF, you need XLE and XLK. Those are diversified. They're pseudo non-correlated, right? Some of them, like financials, for example, way less correlated to the stock market overall, way less correlated to the SPY and the you know, the movement overall to the broad market. So let's go back to this, and I'll kind of drive this point home. A lot of trades that I'm taking. Does anybody want to know some simple strategies to hedge? There's a lot of ways to do it. And okay, hedging. Let's talk about it. Number one, hedging is not free. Okay. Now, I'll put an asterisk next to that because I can build positions to hedge that actually give me credits as a trader. Okay. So as an example, I'll give you some trades. Hedging helps alleviate the pain and drawdown from a sell-off. Okay. Hedging can help and assist in a, you know, black swan event, which is what everyone thinks about, right? It doesn't happen that often. It's obviously nice to be trading around a black swan event and knowing that something is going to happen, but we never know. If everybody thinks it's going to be a black swan event, guess what happens? It doesn't happen, right? Why do you think we haven't had a recession? Because everybody freaking thought there's going to be a recession. right? Everyone thinks right now the market's going to sell off. Why isn't it selling off? It's too mainstream. You know, the market doesn't like to move with the herd. The market is typically contrarian. So right now, I mean, if we're not extreme greed, if we're not extremely ridiculously overbought, if we don't have, you know, high PE ratios, if we're not fundamentally overstretched, this market has room to run. It might have some technical frailties underneath. It might have some, you know, some things to be mindful of, and there's, you know, fragilities and there's uncertainties. But if everybody thinks of a black swan, if everyone's positioned for a black swan, it's probably not going to happen. You know, it's just a weird psychological phenomenon that it's not always the case. Everyone thinks recession, it's not going to happen. The pain trade is more up, right? This is what's crazy. If you can approach the market this way, the pain trade means the market's going to do what is uncomfortable for traders. Right now, what's uncomfortable for traders in a weird, twisted way, what's uncomfortable is the market going higher. Why? Because everyone thinks it should go down. Everyone thinks it's gone up enough, you know? So hedging can assist, but hedging is rarely free, right? Unless you're positioning your whole portfolio to tilt bearish to be profitable in a big sell-off, most of the time you're just trading to protect. You're trading to lower your cost basis. You're trading to not go, you know, dollar for dollar in drawdowns and percentages. You're trading to survive, right? That's what hedging is. Now, strategies. Okay, so you can also hedge by continuing to reduce correlated exposure and continue to take profits. Okay, so strategies that I like to use is hedges. If I'm doing, easy hedges, right? So easy hedging. Currency trading, trade FX, futures trading, scalping or swing trading with current conditions. You don't have to be bearish to hedge. If I have a core position on the SPY and I'm scalping futures on the ES, okay, which is your /ES, your mini futures, right? Your S&P E-mini futures. If you're scalping that week to week and you're grabbing some profit, that's the same as hedging. Why? Because you're making profit, building the cost basis or lowering the cost basis because you're adding profit to your bottom line. You can either, one, consider that as income, or two, reduce your core position size, right? Or your core position cost basis. Does that make sense? So if you trade currencies, one thing, so 2022, 2020, 2008, 2015, 2016, all these crazy events we've seen in the markets, from U.S. equities markets to currency markets, Forex markets, currency trading is, to me, always the best equalizer because it is a really good example of trading risk on versus risk off. Example is, right now, the Japanese yen is by far the weakest currency pair in the world, by far. And on yesterday's session, I believe we talked about, or maybe it was Monday's session, we talked about the Bank of Japan right now is in a place where they're no longer sitting at negative interest rates, right? They're sitting at 0.9% or something like that. It's 0 or it's 0.9, but they're no longer negative. So the Bank of Japan is sitting in this, they're no longer cutting rate scenario. They're no longer at negative swap, negative interest rates. They're negative swap because of other currency pairs compared to it. But they're sitting at neutral right now, okay? They're the only central bank that is potentially looking to raise rates now, okay? What up, Frank?
Hey, how's it going, Chris?
Good, man. How are you?
Pretty good. How's trading going today? I know it's gonna be a long streaming day, so we got a lot to talk about.
Yeah, for sure. So I was just getting into the subject matter of, you know, if I'm looking to protect my portfolio, these are a couple ways to do it. I was just talking about, you know, currency trading, futures trading. So currency trading is a completely different beast altogether. If I have a stock portfolio, stocks and options portfolio, currency trading would essentially be a way to hedge. Currency trading is leveraged. So if I have a 50-to-1 leverage account, let's say as an example, I am, well, for me right now, I am long FXY, which is a Japanese yen ETF. I'm long that in my stock and options portfolio. If I wanted to hedge that position, I could also just buy the dollar yen or buy the Aussie yen or buy the CAD yen or buy the Swiss yen or buy the Euro yen or buy the pound yen or buy the New Zealand yen, because all of them are going up against the yen. That's a hedge. Now, I am just sitting in FXY because over time, I think that instrument will go up. I think the Japanese yen will change directions at some point. That carry trade, that unraveling, that deleveraging will happen probably in the next 1 to 2 years. I think sooner. I think I would be surprised if we have an event coming into like 2025, but it's hedging, right? You have a core position, you have something to trade against it. You can either have profits in the short term that lower your overall cost basis for your core position, or you just use it as your core position is going to go profitable and the hedge is defined risk. So what I said at the very beginning, hedging is not free. Typically what traders do in the stock market or the options market is they buy puts, and that's a hedge. Well, I can tell you many times over that I've hedged with long puts and I just pay a debit and I lose all of that money. So it's not free when I'm just getting a paper cut by a couple of dollars, paper cut here by a couple of dollars, paper cut here by a couple of dollars. That's actually increasing my cost basis. So what I like to do for hedging, if I'm trading futures, fine. If I'm trading currencies, fine. I could say like 0 to 5 DTE. So we'll just say short-term trading. Also hedging because it's something that's short-term to help me lower my cost basis. I can also use, I use, it's a couple of strategies here. I can use it's essentially like a put condor. I can do put spreads. I guess it'd be a bear put spread. Bear put spread. I can do long put. I can do it's a combo trade. It's kind of like a butterfly, but it's been popularized out there. Basically, you do a bear put plus a bull put. Okay, but if you want to make more money on that trade, if you want it to be a net credit, you can do then a cash secured put. Okay, all that means is this: if price were to be and I looked at this morning on the NDX. So if price is here, so I'm going to draw this out. If price is here, I could do a bear put spread, which means I buy a put here and then I sell a put here. So if I put a buy, I'm going to put a +1. If I sell, I'm going to do a -1. Okay. And then down below that, I can also position for a -1 here. So that means I buy a put, sell a put, sell a put. All right. Now that should come in as a net credit. Okay. And what this trade looks like is if I do this and price is here, if you've ever seen a risk graph with options trading, it would look something like this. I have risk on the trade. Okay. If it's a naked put at the bottom, it's going to be undefined risk. Okay. Which means this. That's my risk on the trade. But I also have this as my trap. So this would be the credit that I collect on the trade. That's the initial credit. So if the price goes sideways, I make this credit. If the price goes down a little bit, but it doesn't jeopardize my bear put spread, I make credit. If price goes up a little, up a lot, I keep my credit. 4 out of 5 ways to make money. If price were to fall down here, okay, now I actually start to do this. I start to get into this trap where I'm trapping the bears with additional profit. And as long as price continues to go down here, but does not get below my naked put, I keep all this extra profit, which is going to be my max winner. Usually this is going to be about 4 to 5x than what you're collecting. So if I collected $1 on the trade, I can usually max this out at 4 to 5 times that.
This kind of looks like a butterfly, is it not? You got the shape of a condor going, but
yeah,
there's only three option.
But it's not a butterfly because a butterfly has a peak trap. This is actually spaced out a little bit longer. So this has the type of like profile. It has a profile of it's really like a put condor or call condor where you're trying to give yourself like a big window. So let me just build it and I'll show you. Okay.
So these are puts. You're selling 2 puts, one way below money.
Yep.
And then you're buying 1 put. Is it at the money or like where exactly?
Let's talk about it. So let's do this. It'll be easy to trade this in futures. So I'm going to go. Let's go NQ. Right. Let's go NQ. So we'll go NASDAQ futures. All right. So NQ is my feed. Let's go to the chart here for NQ. And let's see if we can build the trade here, Frank. So NQ there. All right. So we're trading at 20,259. Now with the futures market, we have leverage. With options, we have leverage. I would like to say this. If I can take a trade where I can trap the bears, okay? And this is what's going to be tough is maybe if I set the trap for the bears, Frank, where would you think would be a good spot to trap the bears? Just let's talk about it technically. Let's talk about it mechanically. Where's a good place to trap the bears?
What do you on NASDAQ?
Yeah, let's go NASDAQ. So I'm gonna trade this on the NASDAQ E-mini futures, and I'm gonna see if you see the same thing I do.
Maybe if it broke support at 19,400.
Okay, so all right, so the lows that we had here were 19.7. The CPI gap is 19.5 or 19.6. You say break support at 19.4. Are you looking at NQs? I'm on the daily.
Probably a little different. I'm on NAS 100, but let me pull up NQ.
Okay, pull up NQ so we can look at the same price.
What is that? NQ1 exclamation point.
Yeah, just type in NQ and it should pop up.
Okay, so 19,730. If it breaks that zone,
okay,
I think that would be probably a good bear trap. Because you know, we've made lower lows before only to come back and more in this current uptrend. So I guess if you're trying to create a bear trap, that could be one, but I guess you would never really know if that sort of thing will work out, because it could just break lower.
Okay. So let's think about it this way. If we want to trap the bears, we not only have to trap them with a downward play, but then we also want to turn that downward trade. So remember, if I just did a play the down move, it's a debit, right? If I just play it down, I'm like, you know what? I want to go down on the NQ. I think this is going to go lower. Well, I can either buy a put, I can do a bear put spread. Otherwise, I'm doing something. I mean, if I want to make money on the trade, this is my plan. If I plan it for a down move, great, it's going to be a debit. But what I'm trying to do is pair that with a trade that lets me have a bear play and have a trap for the bears, but also walk away with a profit regardless of what happens. So if the market drops, I have net credit on the position. I have my bear trap in place that the bears are falling into my trap, and that's good for my profits. But also I have a level that I would say this, and I don't know, we're going to try to construct it. I think a bear trap would be if we break the floor, you're spot on, dude. If we break the floor, I want to be bearish, right? And I don't know if it's going to be, bearish a little bit or bearish a lot of bit. But I would say for me, if I'm going to get this trade trapped, I should be looking at the NQ as my ownership position would be down here, right? So I'm looking at 17,250 as my floor, okay? If I'm going to put in a naked put or put in a synthetic play, 17,250 is going to be my floor. That's my bottom, right? 17,250.
Would you collect like 0 credit off that?
Dude, in an NQ put, dude, you'll make it. I'll show you right now. Watch. So let's go.
How far out is it?
I'll probably go out 45 days for this trade. Here's a 44 day. Okay. Here's a 44 DTE out to August 16th. Okay. So if I did what I say the number was 17,250.
17 something, yeah.
Okay. 17,250. All right, 17,250. If I sell a put, I can collect 1875 on that right now. Okay. Now that's credit. This is a futures trade. You're only getting a fraction of that. So based on this, getting 1875. Your max profit's going to be $375. That's not exciting. Okay, I'm not excited about the trade. But to do that, Frank, I'm only tying up $4,600 of buying power. Okay. So what's nice about this is reasonable, but let's look at the return. If I have 46.57 in buying power, 375 of max profit divided by 46.57. Oops, I did the wrong button. 375 divided by 4657. That's an 8% return on my capital. Okay, I don't think I'm risking $344,000. That's max loss. That's likely not going to happen. 17,250, 45 days out. That is this market dumping over 15%. Okay, around 15%. So I'm giving myself a 15% cushion to be right. Now, understand that if the market drops, it's going to show that I'm in a pretty nasty drawdown. Even though I know the line in the sand is 17,250, all of the Greeks are going to change in that position, that potential risk, that volatility, all these things are going to increase. So I want to pair that with a trade that allows me to get bigger profit. Okay, so 17,250 is going to be my first trade. I'm going to sell it there because I'm saying that's my floor, right? Now, can I take a debit spread that allows me to still make net profit on the position, okay, and tie up less buying power, maybe a bit more because I'm doing a debit spread, so it might be a little bit more buying power. But let me try to create this thing. So if I did that, that's a delta wise, dude, that's a 3 delta. That's crazy out of the money. But I would say, all right, let's move this up. Okay, let's say we go here to around like 18. Let's go like 18.4. I'm just going to change this a little bit. If I did 18.4. Okay, now an 18.4 is an 8 delta, right? And I make $1,000 on that trade, and but you look at it, it ties up now $8,000. So I just doubled my cost basis of buying power reduction, but I'm making about 3 times the profit. Okay, I mean, that's the trade-off. Do I love this trade? I don't want to tie up $8,000 of buying power for the trade.
So is this where your spread comes in? Is that what you're talking about?
Yeah.
Is this the low end? So
this is the low end. So here's what I'm thinking. If I did an 18.4, okay, if I did an 18.4, or maybe, you know what, let's just go around. Let's go 18,000. Okay, let's go 18,000 right here. Right? So buying power is reduced by 65.50. So I'm going to do an 18,000, and I'm going to put that floor around 17.2. And look, for anyone that's typing in questions or charts, just let Frank and I talk for a little bit. We'll take requests. I'll do all your currencies. I'll do your gold and silver. We'll take a look. We see it in the chat, so don't worry about that. All right. We do pay attention to that stuff, and I'm just let me stay with a coherent thought and not just jump all over the place. So I'm going to do an 18,000 put. Now I'm going to pair that with a, let's say, a 17,250 to make this a spread. Okay, there. So look at the difference. If I delete this leg, I can generate $680 of profit in the next 44 days. If price goes down a little bit, sideways, up a little bit, up a lot, I'll take $680 of profit. Great. Do I need all that profit? No. Do I want all the profit? Yes, obviously. But if I spread it, this ties up $6,900 of buying power. If I spread it, now I tie up $2,300, $2,400 of buying power. Big difference. Now, I did cut my profit in half, but I've reduced my buying power by about 30, probably about 50 to 60% as well. So look at the numbers again. $7,000 of buying power.
I honestly can't see it, but I'll take it.
Okay, well, I'm talking about it. Yeah, so it went from $7,000 of buying power reduction to now $2,400. So more, okay. I saved more than half of that buying power, which is good. Now, this is a credit spread that I can take that I get it. It's wide. Like you have a max loss of $15,000, but this is why I craft the other trade. Okay. Now, what I need to do is see if I can create a bear put spread that will allow me to, and we're talking about price, and you said breaking the floor at 19.7. So if we buy a put here and we sell a put here, this is going to cost me money to take the trade. Okay. Now I'm going to move this lower. So let's go 9. Let's try to see if we break back below like 19.5. Let's see what that looks like. So I will buy the 19.5, and sell the 19.4. Still cost me money. I'll go 19.3, 19.2. Now I make money on the trade. Okay. Look at, so I just want you to pay attention to this. Now, this trade, and I can move this lower. I could say this is a, a 19.1 by 19. Now I'm keeping more credit on my trade. Yes. So now I can keep $4.40 of credit. My buying power only reduced by $1,500. I can make $100 right here. Okay. $100 right here on that contract, which actually would translate into my max profit is right here, Frank. So if you see these three legs, let me change the color. So this is a bear put spread. So I'm buying the 19.1. I'm selling. So this is going to be a +1. 1 second here. So the 19.100 is a +1. I'm buying that put. This one I'm selling.
Could you refresh me, because I'm confusing bear put and bull put. Is a bull put spread when you have it below money and you're hoping for price to stay above that level, or is that a bear put spread?
Say that one more time. The bull put is what?
So you said bear put.
Yes.
But you're hoping price stays above that level, right?
As a net result, yes. But so a bear put is a debit spread. So let's just go. This would be an easy summary. So if you want to go debit spreads, okay, a bear put spread is you buy a put to be bearish, okay, and you sell a put lower to lower the cost, right? If I have a bear put, that would be I'm bearish on the NQ, and so I buy a put at, let's say, I'll do it at the money. I buy a put at $20,270, and then against that I sell a put lower, and that's my bear put spread. It's a debit spread. It costs me money, but if price falls and falls to my levels or falls through my levels, it's a bear put spread. So I'm bearish overall in that position. Now, again, let's just simplify this with go debit spreads versus credit spreads. So I can do a bear put spread, which means I want to be bearish. So let me simplify this. So bear put spread is I'm bearish. Okay. I'm bearish. Okay. A bull call spread is I'm bullish. Right? So this is what you and I do a lot. If we're trading earnings, we talk about this all the time. If I'm doing earnings and it's affordable enough and we hit the expected move, I do a bear put spread, which is a debit spread. I do a bull put spread, bull call spread, which is a debit spread. If price goes up beyond that move or price goes down beyond that move, those debit spreads max out profit. And the idea for that is if I do both of those at the same time, like you do in earnings, one of those trades wins over the other, and I keep the net profit, right? So I can, for the whole position, I can be directionally neutral, where it's like I just need price to go up or down. If price goes up high enough or down low enough, my bear put spread or my bull call spread wins. So example, what's the last earnings play that you and I did that we made money on? You remember?
I think maybe it was Salesforce.
Yeah. Okay. So Salesforce CRM. It was way beyond the move to the upside, correct? Or downside?
I think it was downside.
Downside. Okay. So way beyond the expected move to the downside. So if I had a bear put spread, okay, let's say that I'll just keep the numbers really simple. If I did a bear put spread and let's say that Salesforce is trading at $100, okay, and I bought the $100 put and the expected move was $10. So I bought the 100 put to go down in price, and then I sell the $90 put to lower the cost basis. So I buy the 100, I sell the 90, I max my profit out at $10 credit. Now that might cost me $4 or $5 of debit to participate in that trade, but if I'm right, I can keep the remainder. Right? That's a bear put spread.
It won't cost you the 10 to get in.
That is correct.
Yeah.
Yes. Okay. It won't cost you pretty much you're paying for the time and you're paying for the expected move. If you just do a put and a long put, you're going to pay pretty much the entire move. Okay. Now, if you have an exceeded move, you typically make really easy money, and there's unlimited upside with long puts and long calls. But it's not probable when you have to pay for the entire expected move. This is why I do debit spreads.
In Salesforce's case, if we're working with those same numbers, it did go way beyond an expected move within like a day. So if you had a week or two expiration looking out on a simple put, it would have been really good. But if you had a slow, chug lower, as in it just was kind of running out of steam, that's when that bull put spread or bear put spread would have worked out better, I guess, right?
Yeah, the bear put spread works out if it's like a slow, steady move, just because the Greeks will change so aggressively on the sell leg if it's beyond the expected move. But as an example, the move in Salesforce, so I know that my max credit was like, again, let's say it was $10 was my max credit. If we had a way beyond expected move, I can still grab probably $8.50, $9 and change if we went way beyond my levels. So you can still collect the majority of the trade, but you're not going to get it all up front. And I've seen this. I've seen the SPY, for example. If I go out 30 days and the SPY moves, $5 beyond my strikes, I should be like maxed out in profit. But because the Greeks are changing and that sell option is now underwater, and there's time left in the trade, it will not allow me to capture that full credit. And I don't want to wait for expiration on a lot of these trades when I'm doing a directional play. So let's go back to this topic here. Debit spread is, if I'm bearish, I'm doing a bear put spread, which means I'm buying a put, close to the money. If price drops, I'm trying to then sell a put to capture that gain and pay less for the trade overall. But I've got a bearish outlook on a particular stock or index or whatever it is. That's a bear put spread. A bull call spread is I'm bullish. I'm buying at the money. I'm selling higher, or I'm buying in the money and I'm selling higher, and I'm just trying to get, a tick higher. If I'm bullish, I'm doing a bull call spread. But remember, you're paying for those option trades. Those spreads you're paying for. Credit spreads are, I try to teach this where it's line in the sand. Credit spread is, I want price to stay above this level. So that's where I sell my put, and then I buy a put lower to create a defined risk trade. Okay. Yeah. So as an example, on the NQ, I'm not going to put a naked put in the NQ at a $20,000 instrument. I'm not going to put in a naked put on the NDX at a $20,000 instrument. It's gonna ask me to tie up about $250,000 of buying power. I'm not going to do that. Okay. So a credit spread is, if I think price will stay above this line in the sand, that's where my sell put goes. And then below that, I'd buy a put to keep a spread. And what I keep on that is the credit. And as long as price stays above that line in the sand, I keep that full profit. I keep that full credit. I don't get any more profit. Like if it goes unlimited upside, it doesn't matter. Whatever credit I collect up front, that's what I keep. If price goes sideways, I keep. If price goes down a little bit, as long as it's not violating my line in the sand, I keep. So that's why option traders like to sell, because time works in your favor. You can define your risk, right? And you can have price go down a little, maybe down a lot, maybe up a little, maybe up a lot, and you can still make money on those trades. But you're not going to make a ton of money. You're just going to keep your credit. Okay. Yeah. Bear call spread is you're calling the top. NVIDIA. I'm sure there's tons of traders out there that were buying puts in NVIDIA and getting smoked. Tons of traders out there that are doing bear call spreads in NVIDIA getting smoked. There it is. Your line in the sand is, I don't think price can possibly go higher. So you put in a bear call spread. If you don't think price is going to go higher than this line, then you can sell a call. And then above that, you buy a call to define your risk. If price stays below that line in the sand, okay, you make money. That's your bear call spread. So that's the difference, right? Now, what I'm trying to do with this trade is, if I wanted to create this trade in such a way that this is going to be my trap, okay? So what's nice about this is, if the Qs, or the NASDAQ rather, so this, the E-mini futures NASDAQ from 20,300 were to fall into my trap, right? Now that's a long ways away. Like, we've got to fall a ton, but the nice thing is, my trap is going to pay me about $2,100 if I'm right. And what that looks like is my risk, because I define it, I have a risk like this, I have a trap like this, and then I have my credit. So I'm keeping the $3.95, it's going to be something like this. So this is my $3.95 right here. That's my credit that you can see on my chart right now. So $3.95, like that. That's my credit. Sorry about my ugly freehand. $3.95 credit. Now my max profit is going to be about 7. Actually, it's about I'd say about 5x. So if I can keep $3.95 regardless, if price falls into my trap and prices, so if the NQ drops between 19,000 and 18,000, that is my trap that gives me a 5x return. Now, in truth, that 5x return is also based on me selling these options, which means that time is of the essence. That means as we come into the final, let's say if this is 44 days to expiration, probably the last 3 days or the last 5 days of the trade is when I start to see the profit. I don't have to take this all the way to expiration, but it's going to be, I've got to suck that time out for most of this trade, probably 90+% of the time out of the trade, in order for my max profit to be reached if price is in that window. So the good part of the trade is I can essentially be bearish with a bit of a hedge, make money on the credit side as I put on this trade, have a bear trap in here that allows me to make a 4 to 5x return, and still have the risk defined trade where my max loss would be steep, right? But I could also cut this loss off. Like, I don't have to take a $12,000 loss. I could say, you know what? If I take this for a $4 credit, I can close this out for, let's say, a $10 debit. I can contain this loss quite a bit. I don't have to take the full loss in the trade. You know?
Yeah. If price were to fall below where your trap is.
Yes. So if price were to fall below 18,000, so this is my trap right now. This is good. I would have all of my max profit in here. But if price falls below 18,000, this is where the pain starts for me. Now,
so
the good thing is
I
my
have a
pain is
question
contained.
though. If you said this is 45 days out.
Yes.
If price fell into that range after 20 days,
yep,
would you still have credit that you could collect, or is it still up in the air where, you know, maybe your account or your contract is worth, what would it be, more? If your contract is more expensive, so you're at a loss unless it's like unless it stays there for the next 20 days.
Correct.
And closes out there. So would you be in profit at like halfway through if price was like in the middle?
Okay, so I'll repeat that question. So we're going 45 days out, and you're saying that within 20 days price comes to about here. Is that what you're saying?
Yeah. Would you be in profit there?
Okay. So the position would be this. This would be in profit by probably about 80 to 90%. So this bear put spread would be mostly in profit. Okay. The issue with that trade, if after 20 days, okay, after 20 days, this trade was, you know, in my trap, but I still had time left in the naked put, or I still had time left in my bull call or my bull put spread. I need time to continue to work in my favor, and I probably need to have, so this would be in profit. If I wanted to take the profit off, I can, but then I also have the line in the sand on my bull put spread. So what I probably end up doing is I would take the trade off in segments, where I would take off, if I wanted the hedge trade, I take off the bear put spread for profit, and then I leave this trade on and kind of fingers crossed that the line in the sand stays the same. Does that make sense? So because it moved quickly in a short amount of time, my time that's left in this trade, I still need to get the extra time premium and time decay out. But because price has fallen, the Greeks have changed. Now, instead of a 5 delta, this is now maybe a 15 delta, maybe a 20 delta. And so I'm not showing as much credit for this as I once was. And so I'm probably going to show that although this is profitable, this is going to be break even, or maybe at a loss for right now. Okay. But the loss is still, as long as price stays above it, right, where price goes sideways, or we stabilize, then this time continues to get taken out of the trade. My theta decay, all the stuff is good. And eventually this trade starts to show, let's say I did a break even here. If I do a break even here, but I took my profit on the bear put spread, it still is a winning trade. Okay, but you're right. Like that's the pros and cons, where it's not always going to be like, if I did this trade and price fell immediately, I'm not that excited, because yes, although I'm right on this trade, I'm not that excited because this position is threatened a lot. Like how violent this thing falls is threatened a lot. But if it's a slow and steady decline, let's say it goes down a little, right? And I'm saying that price is here and we're falling. If price goes down and then stabilizes, and down a little bit and stabilizes, and down a little bit and stabilizes, if it was like this slow grind where it takes time to do that, this is where your profit looks really good.
Gotcha.
Right? So this is where time works in your favor, because you're still selling this trade. But if it's a slow grind to the downside, that's when you can see price started here, starts falling in price, and then you start to get the ramp up to find that bear trap. So if I build this trade, I just want to show you what this looks like. Let me see if I've got my dashboard up here. Yep, let me go option chain, risk. Where the heck is that trade at? Let me just build a risk graph here.
Well, Chris, there's a chance that you might have to do this later, and I'm going to talk about gold later because it's
okay. Are we
got Kenzo coming on?
Okay, my fault. Well, hey, all right, yeah, that's my fault. I thought we had. I know it's like a big old marathon. We're gonna take a little breather. That's fine.
Yeah, but we'll be back at like 12:30, 1-ish, and then we can keep talking about this. I have ideas on gold I want to talk about too, but we'll do that later, I guess.
Okay. Let me wrap up one thing. When we come back, let's like put a 5 or 10 minute pin in this conversation to wrap this thought up. And then I do want to address, broader markets. You want to talk about gold? I'm interested. Silver as well. Crypto, I'd be. So let's talk more. Let's take comments. Let's get some charts. Let's do some more analysis. But we'll wrap this up. And Kenzo's coming on, so enjoy the rest of the show. I'm sure James is going to play a little segment. But all right, we'll be back in a little bit. Thanks.
Yep. Thanks.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Good evening. I hope everyone is doing great. So yeah, thanks to the team and everyone who is actually here. So as we have a little bit more time, please guys, let me know on your comment sections what pairs do you want me to check. So I will be going through that, but at the moment we already on DXY, or you can call it dollar index. So what's really happening on dollar index is quite straightforward. We can see that we just received around 1 hour ago, PMI or service PMI. It was below 50. I think it was around 48. And that is not really good because the number it's supposed to be above 50. So that shows the weakness of that event. So that's why we also see DXY trying to reverse. So on this time frame, it's actually a daily time frame. So I'm expecting to see the market reaching this support area, maybe before going up, or maybe we might have a nice breakout going lower. But remember, this week we also have NFP. Things might change later today. I think in less than 3 hours, there is a FOMC meeting. That can be something else because it will depend if maybe the statements or their statement is going to be positive or negative, or it will be sounding like they're going to cut the rates or not. And then we are going to see some moves from there. But at the moment, we'll just have to wait and see. So So what pair is this? It's actually dollar index. It's a dollar, so it shows the strength of the dollar. So at the moment, I'm expecting to see a nice reversal. Already it's reversing, so we'll just wait for the news and see what's really happening. So let me go on 4 hours time frame just to see what's really happening. Just to see what's really happening. So obviously you can see that the overall structure here, it's already going higher. So I was expecting to see the market going up, but I was expecting to see maybe a very nice reversal around that. And it seems like the market did not really reach that, which is also good because this shows us that the dollar is losing some momentum. So other pairs can actually breathe. So at the moment, we are just hanging around this level. I'm expecting the market to reach this support area maybe before we see a bounce, but at the moment it seems like it's still going to melt for now. I will go on the next one, which is gonna be okay, let me just go with the line. I will go on Euro USD. So on Euro USD, let's see what do we have. I saw it was reversing very nice. So on Euro USD, we have a very nice structure. I think if I go on a daily time frame, you will see the overall trend. So this trend is actually a very nice downtrend structure. So we expect to see the market go lower as we are continuing with this trend. You can see. So I'm expecting to see the market continuing like that, but the news were not actually in favor of the dollar. That's why we see Europe or Euro reversing from this stage. So maybe the market will reverse around this area, or maybe the market might end up touching our outer resistance before we see a very nice sell-off. But at the moment, the structure is still the same. I don't think about buying or something. If we can go on 4 hours time frame, I think that can also be good. Let's see. This is what we have on Euro USD. So I'm expecting maybe the market to reach this level. Maybe this area is where the market actually broke out of that trend. Maybe the market will be touching that before we see a continuation of that sell. But at the moment, we just have to wait. Maybe the market will end up reaching the resistance before we think about that sell. So let's push to the next one. Let me know on the comment sections which pairs do you want me to check. USD JPY can turn around for a pullback or deep bias enter here. Okay. So on USD JPY, my overall structure, it's actually a very nice bullish move. Actually an aggressive bullish move. It's actually on a very nice aggressive move, and I think that reversal it's actually welcomed because we did not really have a proper reversal. So I think where we are, we might see a very nice push to the upside. But the overall structure, we can easily see that we are on a very nice bullish move, and that can actually continue like that. You see. Yes, we saw some news. As we said, PMI, it was a little bit weaker. But if you check JPY, it's way too weaker than whatever that we received. So it's still, the dollar is still very stronger compared to a JPY. You see, so I'm still expecting to see a very nice bullish move. Yes, I was actually maybe expecting to see a nice reversal before I go higher, but this it's also part of a nice resistance structure. So which means once the market goes up, we will actually look for that continuation of a buy again. So let's maybe go on a 4 hours time frame. You will see that. So on a 4 hours time frame, you can see that structure, it's where the market was just trying to create something. Maybe it will become a very nice resistance. It's not really that clean, but that's what we have at the moment because USD JPY, it's aggressively on this bullish move. So something here, it's very welcomed because we will have a clear structure if maybe the market will end up going higher or not. You see. So, but I think a nice, this is what I want actually. I don't know if maybe the market will do that, but I want to see the market selling so that we can have another enough momentum for the market to go higher. But JPY at the moment is quite weak. You see, so you have to understand that. So on GBP USD, I'm going straight to that USDT and NASDAQ and also gold. So I will just go with the line. And then on the comment section, just let me know pairs that you want me to check, then I will be checking them. So now we are on GBP USD. We are coming from a very nice downtrend structure. You can see it was going down, but after that we had a very proper breakout. So which means we have to focus on that type of a structure. So the market here was actually going all over the place. If you check, the market was actually just broke out here. We're expecting a very nice bullish move. You can see that, but the market aggressively actually reversed. So we were thinking about a sell, but we also had a very proper support area. We thought maybe the market was going to continue going down, but since we had this support area, so we have to stop thinking about the sell, unless if the market did break that, we were going to think about the sell, but that did not really happen. Now we have the market breaking out of this resistance area. So now, since the market pushed up, yes, I'm still expecting to see a nice push, but maybe the market might actually try to reverse just for a retest before we go even higher. But at the moment, it shows us that we are no longer on that structure of a nice downtrend. So it means we will see a very nice reversal from there, you see. So now let's push to the next one, which is actually gold. What's really happening on gold on a very bigger time frame, like a daily time frame structure? I think we can easily see that the overall structure here, where we are coming from a very, very nice bullish move. This is a daily time frame. So you can see that the market is actually on this aggressive bullish move. Where we are, yes, the market might be reversing here and there, but the overall structure here, or the trend on a bigger time frame, we are still on a very nice uptrend. So we just have this type of a move where the market is actually ranging. Even around this area, we did have quite similar structures, but after that the market did push higher. So we will see if maybe around this area the market will be going higher. Maybe that will happen. But remember, mostly gold, it's actually treated as a safe haven. So as we see conflicts going or heating up in the Middle East, so I think gold will be going back to its bullish momentum. As we saw that if we check the news, slowly we see stuff going on, Israel and Hezbollah or Lebanon or whatever, the tension seems to be heating up. And that actually slowly will have an effect, actually a positive effect on gold, you see. So that's what I see on gold. So once we start to go even closer, we start to realize that, you know what, yes, on the bottom side, we had a very nice support area, but this side on top, we also had a structure that was showing us a resistance. I think maybe you're going to see that on a nice 4 hours time frame. So on a 4 hours time frame, we can easily see, that we had a nice resistance. We had this nice resistance here. And since we had a negative PMI, the market was now getting weaker. Dollar, it was quite weaker against gold. So now we see gold breaking out of this structure. So this shows a bullish move. This shows a bullish momentum. So the question is, will it keep going higher? So it's up to the market. But what you can do actually to be safe, yes, we can see that it was a diagonal structure. But for you just to jump, you can also mark this area and say, you know what, that is the closest area that we can call a potential resistance. So if the market breaks out of this area, I think we will actually try to look for a buy above that area, because there is a chance that the market sometimes might create a nice reversal, you see. So I will be actually going on the pairs that you want me to check. Let me see. US 30 is one I'm struggling to get with. So leave. Okay, GBP resistant area approach. Okay. On gold, I think everything's fine. It seems like gold seems to be going even higher. Maybe it will be pushing to the upside once time goes on. So now we are on US 30. So on US 30, we can easily see that we are coming from a very aggressive bullish move, which reversed after the news of rates that they're not going to cut the rates. Then that was actually bad. But after that, things started to go back to normal. We saw the market started to consolidate around this level. So, and if you checked Nasdaq and also S&P 500, they are already higher. I think one way or another, US 30 will end up catching up with them. But at the moment, you can see that US 30 is not really going anywhere. I think we'll get actually to see US 30 going higher. But still, even if we think like that, we still have some very nice structure that we can deal with here until we go further like that. So this is what we have. We can see that the market was ranging from this level, and now the market is no longer on that. So now you can see that we are no longer on this nice downtrend, this ranging structure. So after the market broke out of that structure, we see that the market is actually consolidating, but the market was actually struggling. This was not actually some very nice moves. You can see some reversals were actually aggressive. These reversals were actually aggressive. Just look at this. It's actually 4 hours time frame, but these moves there were not really good. This one, the last one, it was way much better. So there is enough chance that maybe the market will be reaching our support area before going higher. And from there, maybe we will end up breaking our resistance. Then we will see a continuation of that move. But at the moment, as I also repeat, we have NFP on Friday. So sometimes the market doesn't really move that much when we expect higher impact news. But besides that, FOMC later on, will the news become dovish or hawkish? It's up to the Federal Reserve members. But let's hope for some dovish, maybe dovish statement, which means there is a need for lower interest rates. And if that is going to be like that, that will be good for our indices or NASDAQ, US 30s, and the other ones. You see, so at the moment, I'm still expecting to see a very nice push, but it's either the market will be going towards my support area, respecting that before we buy, or maybe we will see a nice breakout. Then we can continue with that, unless if maybe the market changes. So yeah, I will be going on that US oil. Let's go US oil, EU. I think I did Europe, guys. But I'll also go on that. US 30. Okay. Yeah, I think I'm on the right track. So now it seems like Nasdaq is breaking the resistance that we have currently. So yeah, it seems to be good. Let's hope that the market won't reverse during FOMC. But here is the structure that we have. We can easily see that the market actually is on this nice uptrend structure. Do you see that? So where we are, we actually had a very nice resistance structure, and it seems like the market will be breaking out of that. So if we go closer, you will see that the market did actually have a very nice resistance structure. The market did have a very nice resistance there. So now it seems like the market is getting out of that. But the overall structure here, it's actually a very nice uptrend. So which means we will see the market, most likely, the market continuing, going even higher. Now we see this breakout. That's good. But I don't think it's much better to jump early there. Wait for it to go a little bit higher. I think we can jump on that. But it's not really safe, especially when we have this higher or when we expect higher high impact news, because what if maybe they're going to be negative or positive? If maybe they are in favor of the dollar, this move might change aggressively. And just beside the news also, we are at the highest levels. So it's going to be easier for the market to sell. But for the market to go higher, it might be quite challenging because not everyone is willing to buy at these levels, especially when we expect some like the economic news like NFPs. I think next week or next week is going to be CPI. You see, but at the moment it seems like things are looking good. So I'm still expecting to see a very nice bullish move there. As we break in, I will be expecting to have a very nice buy above that level. So let's push to the next one, which is going to be S&P 500. As you know, S&P moving quite the same as Nasdaq. We are on a very nice bullish move. You can see that. So the market has been going up for quite some time now. We are on that nice uptrend, and it seems like it's breaking the resistance, quite similar to what we saw on Nasdaq, US Tech or US 100. So now we're breaking out of this area. Let's hope that it's going to keep up with that, because sometimes it might move like that, and once we jump in, it might reverse. So let's be extra careful around this level, maybe buy a little bit above that, right? But the overall structure, yes, we are still thinking about a continuation of a bullish move, as we are already on this nice uptrend. So we expect the market to go higher. If we check the trend, it's been going up for quite some time, since April. Not really that long, but at least it's more than a month. So we're still expecting to see a continuation of that type of a move. So let's push to the next one, which is going to be dollar index, not dollar, German 30 or German 40. I don't know if maybe there are people who are trading German 30 or German 40, but just since we are here, I will just go through that before I go on US oil. So on US oil, on German 30, we can easily see that the market is on a very nice downtrend structure. And where we are, by the way, you can see that the market was going down. So where we are, the market is actually on an area, a very important area. We are very closer to the resistance and another horizontal resistance. And every time once the market touches that level, we see some very nice sells. So maybe the market will be touching this area. Maybe we'll get that, or unless if maybe the market tries to break out of that structure. But at the moment, it seems like the market is going towards this diagonal resistance. Before that, maybe we can have a very nice sell. So now let's push straight to that US oil, YTI. What's really happening on US oil? A very nice structure, by the way. So we can easily see that the market is coming from this. It's coming from this nice downtrend structure. So which means the market just changed the trend after we see a nice breakout there. So now we expect to see a continuation of that nice bullish move. Do you see that? So above this area, we did have a nice pending order, which the market did actually go halfway there, but now it's back on this smaller resistant area. I think we have to draw it like that. I think the market will end up continuing like that. So you can see that since we had this nice breakout, the market is slowly going even higher, which means the prices are going up, but it's not really a good thing, because by the way we see the prices slowly going up, this has a seriously bad effect on inflation, because the higher the price, it means slowly inflation will be going up. Do you understand that? So because almost all the products that we receive or that we buy, mostly their means of transport most likely is going to use fuel, and that obviously we are talking about oil, whether it's diesel or whether it's petrol or whatever, but that has actually a higher impact. And if the prices are going up, obviously if you are transporting those goods one way or another, you are just going to charge a little bit more, and slowly that increases inflation also. So now let's push to the next one. Let me see if maybe there's something that I should check. I did check USD, USD JPY. I did check that. Maybe Euro USD. Let's check Euro USD. I expect FOMC and NFP to give it some direction. Okay, thanks, man. AUD NZD. I will just go there and check that. Let's see, gold. It's like everyone is interested actually in gold. So on gold, guys, we already broke out our smaller resistance there. So I'm expecting to see a nice push to the upside. Let's go there. So on gold, this is what we have. So we had this diagonal structure. If I can start it from on top there, firstly, it was just like that. You see that? So we can just draw it like that. But I think this was not really touching very nice. I think if we draw it like that, it's not really clean. I think from this area, it's where it makes sense. So from there, you can easily see that we have a nice breakout. Yes, that we might not really have a retest because it seems like gold is quite stronger. Remember, we have geopolitics. It's not only about US events. Also, geopolitics, they play a bigger role. But what we have now, even though we have a breakout, you can just say, you know what, I want to be safe. This is the only structure that we have that is very, very closer. We can draw something that, and you know what, and we can still say, yes, we can see a breakout. We can see that we have a breakout on our diagonal structure. But for you to start to act, I think we can just wait for the market to get out of that structure before we look for a buy. This one is a bit older. We're not gonna check that for now. So I think if we break this, we will be actually going even higher. That can be a very nice buy. So Euro USD. Let's see what's really happening on Euro USD. So on my side, Euro USD is actually on a very nice structure. We can call that a downtrend structure. As you can see, we are on a downtrend structure. Let me just show you this on a daily time frame. I think I was just confusing myself there. So this is the overall structure of US Euro USD. So it's quite straightforward, downtrend structure. So yes, the news were a little bit bad on US side. So that automatically makes Europe to be quite stronger for now. For now, Europe is quite stronger. But I think from here, that was influenced by the news, but I think we will see maybe a reversal after that. Do you see that? I'm expecting to see a nice reversal. So let's just draw it there. This is where the market actually showed us a first breakout, but the overall structure, it is still actually the downtrend. So we might see a nice reversal from this area, or maybe the market will go or will try to go on that outer resistance before we see a very nice push, or sorry, a nice sell-off. But I think I'm not going to entertain maybe looking for a buy. I think a sell can work very nice. You can see even this type of a move. We had quite similar move there, if you check nicely. So that can be a very nice clue. And it seems like the market already started melting a little bit. You can see if it goes down, that will be good because we still expect to see a very nice down trend structure or a continuation of that. So yeah, any gold, I did gold. Any pair that you want me to check? Let's see. Kenzo, you are the best mentor ever. Okay, thank you. Do you think the meeting will be bad for USD or good? Yeah, you see, I think trying to guess the meeting is not really wise because we don't really know. It's not really the numbers. They will just talk the way they want to talk. But I think things are looking good for the dollar. We see the numbers slowly going down. So that is good for inflation. So maybe they will specify that, you know what, maybe there is a chance for cutting the rates. But if we can be honest, I think it's not really good for us to say, what do you think about the news? Are they going, is it going to be good or bad? The best way is to let's just go and listen for the news together. If maybe everything is positive or negative, we will be here listening and we can start to take decision from there. You see, because if I will start to say It's gonna be bad. It's gonna be good. Actually, that it's just guessing. You see, I think it's something that maybe we can try to guess, maybe, which we're not supposed to do. It might be events that actually releases the figures or the numbers. That's where we can say, okay, maybe we saw this event was positive. Maybe the other one will be negative or positive. That one, it will be easier to calculate. I think that will be, you will be talking from the numbers. But from a meeting point, from something like a meeting or speech or conference, it's quite difficult just to say it will be negative or positive. I hope that makes sense. So, is it possible that Euro USD it broke up? Will it be an overall uptrend? Yes, if it breaks the outer resistance line, I think it will continue going higher. I think there is that possibility, especially, let's say, maybe for today, I think maybe that will be a different story. But let's say maybe later FOMC, they say, oh, we see that maybe we will cut the rates September or whatever the date. And maybe on Friday we release, we get like lower numbers or cooler NFP, that I will see Euro going even higher. And that maybe might force that structure to be broken, you see. So, but at the moment, I think it's, yeah, we just need to relax and see what's really happening. It's just a matter of few hours. So now we are on AUD. I see someone said check AUD. Will the meeting be bad or good? On that one, man, I don't think we will know that. But let's just expect some good news. So on AUD USD, I think the market was actually consolidating on a on a bigger time frame. We can see the market was moving perfectly like that. So this is what we had, and now we can easily see that the market just broke out of that structure. Do you see that? So, but it's coming back. So, which means we might start to see maybe a sell. It's possible, but at the moment, as we left maybe with less than 3 hours before FOMC. I'm not saying FOMC is going to move the market that crazy. Sometimes they will try to make things not to trigger the market in a good or bad way. Mostly they will just try to encrypt their answers or whatever that they say, so that we just think for ourselves. Or they will say, yeah, we're still waiting for enough events or news before we say something. But at the moment, I think we just need to relax. So this is what we have on AUD USD. So we can easily see that the market is still trying to break that resistance. Maybe it will be bouncing back. And if it bounces back, obviously we'll just still be on that range structure. Thank you.
Hey, Kenzo, I want to thank you for coming on the show. You always give such great analysis, and you're always really helpful. Whenever we ask you to come on, you're always available. So we appreciate that. And I know the audience does as well. But we have another guest coming up on the show next. We've got Nick Phillips joining us here. So I'm going to let you go. Thank you again for coming on the show, and we'll see you on Friday.
Thank you very much, man. And also the viewers.
Great. All right. We're going to run a really quick little promo here, and then we'll be right back with Nick Phillips right after this.
What is going on, everybody? Welcome to this segment of the A1 Trading Show. I'm going to go ahead and share my screen here for you guys. If you guys want to, feel free to send through any requests that you have, anything you'd like me to go over and look at. I'm going to touch on some things this morning that we traded in my private group. We traded the ISM numbers. We had a massive surprise to the downside in the PMI figures. So we actually got in on odd USD. Again, I guess you could call it a hyper scalper, meaning I scalp very low time frames. For instance, on this ISM PMI figure, I got in on the 5-second chart. So we got the ISM figures. Dollar downside, odd USD upside is usually my go-to when we get weaker dollar figures. So that's exactly what happened this morning. We had an amazing opportunity because price pulled all the way back from these initial levels within the first 5 seconds. So for me, my risk to reward was, pretty solid. I got in at this level, and I wasn't going to be risking much more below this bit of structure here on the 5-second. I really want to see the market agree with the data the first few minutes after the data is released. That is the in my mind, the highest probability opportunities come from data that the market agrees with relatively quickly and holds that agreement with for minutes or a couple hours afterwards. So we got in here. I took a little bit off the table right in here, and then I meant to take a little bit more off the table right in here, and I ended up fat fingering my exit and closed out my position entirely. Now, one of my my members ended up holding. He got like a 1 to 6 RR this morning or something ridiculous. It was awesome. And I would have been right there with him had I not fat fingered my exit, but it is what it is. So ISM coming in that low this morning is great for me personally because I want to see weakening dollar this year. I've been wanting to see the Feds start to change their tone and go dovish again. We saw some dovishness out of them at the end of last year, and then at the beginning of this year, we were still seeing some dovishness. But then I believe Q1 and some of Q2 inflation numbers had the Feds concerned. It was about April, I believe, they started saying that a strong labor market wasn't necessarily a cause for concern with them, or what were they saying exactly? It was something about it wouldn't be a factor in monetary policy decisions. So a strong labor market wasn't factoring into their opinions on what they were going to do with monetary policy. So we were only going to be taking trades based off of weaker labor data, which we got that as well this morning with our, if I can get this thing to scroll up, with the jobless claims numbers coming out higher than expected, both initial and continued, showed weakening in the job market. And if you guys don't understand that, higher unemployment means more people are claiming that they don't have a job. If more people don't have a job, less people working means less people making money. This is kind of like the algorithm I run through in my mind, what I use to teach my students as well. Less people make, higher unemployment means less people working. Less people working means less people making money. Less people making money means less people spending money. And if less people are spending money, then inflation has an opportunity to come down. If inflation is coming down, then the Feds can start to look at cutting interest rates. So all of that ties into dollar weakness. As interest rates come down, investors that would hold dollar-backed assets will see less return on their money, on their dollar that they hold in dollar as those interest rates come down. So high unemployment means a weaker dollar. Now, for the last couple months, the vice versa scenario of that has not been something we've been interested in. A stronger labor market since about April. I believe it was April when Jerome Powell started mentioning some of this. But a stronger labor market was not an opportunity for us to take any dollar buys, because the Feds were saying that a stronger labor market was not, it wasn't going to be a signal for them to hike rates or hold rates higher for longer. So essentially, you have two typical indications, right? Where a strong labor market would indicate some more dollar strength, and a weakening labor market would indicate some dollar weakness. But you have to factor that into the bigger picture, and the bigger picture comes from the mouth of the Fed themselves. So the mouth of the Fed themselves were saying a stronger labor market isn't factoring into the bigger picture. So anytime we had stronger labor, except for I believe it was the May NFP print that we got, we didn't take any trades off of stronger labor data, and we still won't for the most part until they start to change that tune. The Fed's cut rates when the end is near. History shows us every time they cut 6 to 3 months later, we crash. Interesting. I would have to see that chart to follow that. I didn't know that piece of data. I wonder if they'll surprise us today and cut because construction has layoffs that they haven't seen since 2008. So the thing about today, my understanding of the Fed meeting minutes is there may be some surprise information that the market didn't know previously, but it's just basically like a play-by-play of what happened at the last FOMC meeting. So a lot of that we get told in the FOMC press conference. We just get the actual minute by like the meeting minutes, what was said minute by minute during the meeting. And so as far as what if we're gonna get a surprise today, maybe. I think it also depends on who it comes from within the meeting itself, like who said what, how much agreement was there around what they were saying. FOMC is interesting to trade. Also, I believe U.S. markets close at 1 p.m. Eastern time today, so the meeting minutes don't even drop until 2. So I'm personally not going to be trading them. But yeah, as far as things are going in the economy right now, we're getting a lot of what we wanted to see. As far as personal bias, we're starting to see some weakening in the significant areas of the market that we need to see weakening in order to start getting that dollar weakness that I have been waiting for most of the year. I have been waiting for dollar weakness since February. I was looking back in February. I was looking at USD CAD for sells. Right in here in this area, as we were playing at some of these resistance levels, I was hoping and praying that we were going to get the data that we needed to start selling off from here, and we didn't. We ended up continuing to get some strength here in the dollar, and maybe now we'll start to see some fall off from these 106 areas. And for us, we're targeting just major structure points here, areas where price has shown that it's had pretty significant support before. So if we continue to get that dollar weakness, we continue to get indications that the dollar wants to continue down, that the economy is contracting, we will be selling off the dollar. And it's kind of the perfect storm. I mentioned this the last time I was on the show. It seems like the RBA, the Bank of Australia, may be implementing a bit of policy divergence from the Fed moving forward if we continue to get hot numbers from them. So kind of a prime opportunity for someone like me and the guys in my group to be trading odd USD or the odd futures market to the upside for the coming weeks and months, depending on again how the data releases. We need to see good weak data out of the dollar continue to happen, or out of the US, and strong data showing an expansionary economy out of Australia in order for us to continue to take this to the upside. But it's kind of like potentially a perfect storm happening over the coming weeks and months here. What is my opinion on why gold is spiking? Is it just in a huge range, or is there fundamentals messing with it? I'm trying to get perspective on it. So let's take a look at gold real quick. So on a technical basis, we have broken past this level. This was if you're just looking at technicals, you have a leg down, push up, leg down. So this creates a resistance level. And sometime this morning during London, we started to get a push up above this resistance level and closed there. Well, if we also look at, let's look at 8:30, we got that weakening in the labor market, weaker dollar, theoretically stronger gold, push up. And then at 10 o'clock again, we had the ISM numbers that came out and showed weakening dollar, continue to push up on gold. That would be my USD. I mean, this is, it's, let's see. I've got everything pulled up for futures. It's the exact same thing. Put real gold. Here's gold on a 30-minute, and here's gold futures. Boom, same thing. But if it makes you guys happy, we'll look at XAU USD. So again, you got this resistance level here that got broken out of this morning during looks like pre-London session. As soon as London was opening, we were getting some gold strength, and then 8:30 happened. So weakening labor market, weak dollar, strong gold. I tend to not trade gold during economic data because at times it hasn't moved the way that I would anticipate it to. This morning it is. It's following the economic data fundamental bias that I would have had for gold, which would be we get weak dollar, we're getting strong gold. Okay, and then again at 10, we get weak dollar, we're getting strong gold. On the 30-minute, it may look a little funky, but let's look at 10. So right at 10 o'clock, data drops, and we had this push to the upside for at least a few minutes here. Now this is an interesting little gap here. See, I don't think I have this gap on gold futures. Yeah, see, we didn't have this gap on gold futures. So there's the case for looking at the futures chart, not necessarily the XAU Forex chart. Regardless, I'll move away from that for now. NAS 100, please. NAS is a tough one for me right now. I am not super interested in trading NAS because it's at these all-time highs. It's doing what I would have expected it to do based on today's data, which is pop to the upside. However, it didn't initially do this. We had weak labor data at 8:30, and we had this fall to the downside and kind of hold. And then once the New York Stock Exchange volume came in, I think it took a hold of that labor data, and that's why we saw so much buying in equities this morning, in the NAS this morning. We got this big push to the upside as soon as New York Stock Exchange opened. But then, let me move this here, at 10 a.m., I believe this reacted sort of funky to the ISM. I wasn't watching it too close. Yes, here we go. So theoretically, with ISM, I would have expected this to just rally to the upside, very similar to how AUD/USD rallied to the upside. You have this real strong push to the upside out of AUD/USD. I would have expected the same thing out of NQ, or NASDAQ, sorry, but it held to the downside for a little bit, kind of just stayed here. On the live call with my community, I told them, as all this was happening, as we're hanging out here below the open of the ISM data, I didn't trust NAS to hold to the downside. It doesn't make any sense. But I also wasn't willing to get in because we're at all-time highs on all these equities, and I personally don't like to buy into very strong levels of resistance. So when we're at all-time highs, it also begs the question, where do we target? What do we aim for? If we're all-time highs, how do we know where to go from here? We don't. So makes it a little difficult to trade. But NQ's moves today make perfect sense to me fundamentally. Weaker labor data, interest rates could be coming down. Weaker ISM PMIs, interest rates could be coming down. We're starting to price in, if you look at the CME FedWatch tool, before this morning, even after it's come down since I looked at it earlier, we have started to price in for September And actually, we've lost a little bit of percentage here on the hold for July. I don't think we're getting a cut in July. But for September, we went from, I believe it was about a 50-50 to when I checked it, it was about 30% chance for a hold to 70% chance for a cut. And now we're pricing in about 73% chance of a cut in September. So the markets are starting to price in a higher probability that we're going to get cuts in September. That's good for stocks. That's good for the NASDAQ. If it costs less for them to get access to capital, so that they can further their business goals, that's beneficial for them. That's a win. That's a win in their book. So the NAS upside is making perfect sense to me. Again, I wasn't willing to get involved in this simply due to the nature of the fact that we are at all-time highs for NQ. And yeah, it may be a little while again before I'm actually getting involved on equities or the indices due to where we're at. I don't like to, unless we get fundamental information that tells us we're going to start selling off. I would love to sell off from here. Absolutely. This would be a phenomenal position to start selling from, but it's not as great of a position to start buying from. Now, if we get something, we get another pullback here, back into some of these levels, and we get data that shows, potential strong NQ, cool. I'd like to maybe get involved here, or even if we can pull back into some of these structure levels, which would be a massive retrace for the NQ. I wouldn't mind getting involved there. You're talking about retracing all of June and basically just all of June's gains, which could be a few weeks to months out if it's going to happen. All right, guys, do you guys have any other questions here for me? Anything you want me to look at? Nifty 50. I'll be honest with you, I don't even know what Nifty 50 is. Nifty 50. Let me Google this. Maybe I should know. I probably should know. Nifty 50 index. What is the... Oh, okay. This Indian index. What's the correlation between NAS and US dollar? So I'll show you guys kind of how I tend to write this up, and it's not always as straightforward as this. There's a lot of things that come into play with NAS that may not be as affected by US dollar data. But for the most part, in an expansionary setting, again, there's some nuance to this. So don't take this and run with it like it's gospel every time. This is what's going to happen. But on a general stance, the way that I tend to look at it is in an expansionary scenario, you're going to see dollar strength and equity downside. So when we have if we had hot ISM numbers this morning, I wouldn't have been as interested in trading it because we had weaker labor data, but theoretically we would have seen some equity downside. And then on the contractionary side of things, where we're getting what we got today out of ISM and unemployment, we're seeing a slowdown, we're seeing a contraction in the US economy, you're going to see equity upside. And it all comes back to, based on my understanding, it all comes back to monetary policy. When it comes to US dollar NAS or US data NAS correlation, it comes back to monetary policy. What does this data mean? What is this data saying for the for monetary policy, for interest rates? What are the Feds going to be looking to do based on this data? And if it's hike rates, that's going to be negative for NAS. Theoretically, most of the time, it should be negative for NAS. Vice versa, if they're going to be looking to cut rates, that theoretically should be positive for NAS. again, it comes down to them being all the companies within the NAS being businesses that utilize capital to propel their business ventures forward. So if it's harder for them to get access to capital, to get access to that tool, right? Money is just a tool for these businesses. If it's harder for them to get access to it, or maybe not harder, but it costs more, they're going to be less inclined to go out and borrow capital to get their business goals met, right? So lowering inflation, lowering interest rates. Oh, the same $1 million in lending that I need to accomplish my goals this year is going to cost me 3% less than it did last year. Of course, I'm going to go get that capital. Let me go get that capital. When COVID happened and the Feds cut rates to 0, getting loans was super easy, super simple. It cost next to nothing. I had a mortgage on a house that I got in July. I got the mortgage in July of 2020. I did 2.34% interest rate on the house. It cost me next to nothing to own that house. Today's interest rates, it's going to cost me about 7%. So you see this kind of thing happening on a personal level. Little people who are just trying to go out and buy a house. It happens to us. It makes us not want to buy a house right now because it's going to cost us way more to get that capital, right? Same thing with businesses. Interest rates are rising. It's going to cost them more to get the capital that they need to meet their goals. So that's the basic correlation between NAS and the dollar. And it's really not even necessarily the dollar as much so as it is the correlation between NAS and interest rates or monetary policy. So hopefully I answered that question for you in a way that you understand and can take and apply to some of your trading moving forward. I think my time is about up. Been on for about half an hour now. I'm sure James or Nick is going to jump on here soon and go to our next guest. If you guys have any questions, feel free to follow me on Instagram. I'm more active over there than I am maybe YouTube. Maybe I'll get more active on YouTube here moving forward. But it's been a pleasure. Excuse me. If you guys have any other follow-up questions, feel free to hit me up here in the chat real quick before they call me. I've got a tickle in my throat right now that I'm fighting really hard not to start coughing. Yeah, no problem, guys. Happy to be here. Happy to help. All right.
Hey, Nick, how you doing?
Good, James. How you doing?
Pretty good. Appreciate you helping out today, as always. Guys, like he said, we dropped Nick's Instagram in the chat right there, so you can go follow him. All you got to do is click that link. You'll get taken to his Instagram. Go follow him. He posts a bunch of really useful stuff on there. Nick, thanks again for coming on the show. And right after this little transition, we are going to be right back with Forex James again.
All right, guys. See ya.
See ya.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey guys, it's me again. How you all doing? Let me just sort my camera out there. Hope you're all doing good. So earlier I was on, for any new viewers, I was on the stream this morning. So there was a question asked about the pound Canadian. and I said that we were in a trade, but I couldn't show you the details at that time. But I got permission off one of my traders that they were happy for me to show you the reasoning behind it, so I can do that here. And the reason that I want to show you this specifically is because this is a great example of the type of research that can be done when looking at FX. Well, type of research done with anything really. You can see we're looking at account balances and deficits between the pound and the Canadian. We're looking at the utility. We're looking at business confidence. We're looking at foreign investment inflows or outflows. And then, of course, technical analysis. So you can see the level of detail that is in the sort of back end of the trade. So the market drivers and how little there is on the technical analysis front. So yeah, that's it. It's not anything too interesting. I just thought that'd be worth showing you guys. So AUD NZD, we're getting straight into it. Let's see. So I'm very bullish on this. I've been looking for long positions for a while. You can see I've still got my alert set. I'll get rid of that actually, since that's not going to get hit. So let me just, okay. So yeah, looking for longs. As I've been saying, the Australian dollar is very, very strong. It's very bullish. It's one of the, let me just double check. It still is, yeah, still the strongest currency. The yen is obviously lagging behind everything, and the dollar has really fallen off just behind the yen. So yeah, that's it really. So we can see the Australian is stronger than the New Zealand dollar, but New Zealand is still significantly stronger than the other currencies. So let's just see. I'd like to see this sort of 50% pullback happen from this previous low. But to be honest, with the strength we're seeing, I'm not sure that we're going to get that. So it's a bit of a difficult one because we are heading up very, very strong. Like, you know, it's not really giving us much of a chance to get in. So having said that, my levels would be entry at the 50% pullback. If we do somehow see that, however, I don't think we will, because it would take some sort of catalyst to happen for the market to pull back 50% of this move, in my opinion. So really, I think the other way of playing this is just waiting for a break of this resistance. So we look for this break, and of course we look for the retest, and we trade the continuation. So that would be my game plan. But yeah, it's similar to the yen pairs. It's kind of just on this rocket ship to the upside, with very little downside to allow entries. Ian, we can look at oil, definitely. We'll just. So I don't really have much of an input on oil. Not really looked at it the past couple of weeks. So overall, this market's bullish. However, we are at a good price for oil, to be fair. I know $82 a barrel it's kind of normal. It's not in a sort of huge discounted price or a huge premium. It looks to be quite in a healthy spot, really. So we do have the previous daily candle that's closed. We're really nice bearish. Again, I think this is doji. I think that's what they're called. I'm not too cued into all the terms and things, but yeah, I think this looks quite good. It's quite a nice reaction off this level. The problem is I don't really economically or like fundamentally, I've got no input on oil at the moment. So just following my system, which is trend following, I'd be looking for a long position off this previous level of support that was broken, then turned resistance, and now is support again. I think this looks quite healthy. And then possibly just trading it back up into sort of the $86 a barrel area. Stop loss below this 200 and below the previous lows. It's probably a bit tight there, maybe a bit lower, something like this. However, yeah, this daily resistance is a little bit of a red flag. I'm not sure really if we break this, so we may just go for something a little smaller like this, so just a simple 1 to 2. Euro Australian. Yep. Made quite nice money on the Euro Australian actually over the past couple of days or weeks. So actually, when I say that, we had 2 losses and 2 wins, but these wins kind of balance out the losses. But yeah, I mean, overall, very clear downtrend. As I said, the Australian dollar is performing very, very well. We've just had a really nice daily candle close yesterday off this 21 moving average. So let me get rid of the drawings. So the next kind of thing to watch out for is this level of support we've got. So it's now a case of, can we break this support? And again, just according to the way I trade, we'd be looking for this break and retest to the downside for the continuation of this very clear downtrend that we're in. Targets, I think the clear target here, or the first clear target, would be right here at the support. So again, it would just be entry on this pullback, target down here, just for we'd have to have a very tight stop for this to be a 1 to 2, so we may even have to sacrifice that and just go for a 1 to 1. I personally have no problems going for 1 to 1s. I know that a lot of people are against it. However, I'm more in the mindset of, if there's money to be made in the market, I'll do it regardless of the R&R. As long as it's at least 1 to 1, it's fine. It doesn't bother me really. Pound USD. Yep. So we are seeing some nice movements on the pound actually. So I don't know if you guys were here earlier, so I'll sort of do this as a fresh stream. But yeah, I'm very cautious of tomorrow's elections. We also have the July the 4th in the US, which is essentially a holiday in the US. So I think if I remember it correctly, the indices markets are closed from 1 p.m. So yeah, I'm not too bothered about trading tomorrow. So yeah, just be very careful with pound. Just like I said, we've got the elections, so it could get a bit choppy. You could get taken out just through volatility alone. So I am bearish overall, but yeah, the pound's a difficult one because it's really, really dependent on who gets elected. If it's Labour, it could be bullish, or more than likely will be bullish. If it's Conservatives, then it's more than likely going to be bearish. In fact, if it's anything other than Labour, it wouldn't surprise me if we see a bearish market. So yeah, just keep that in mind if you are trading the pound. It's a bit precarious. Your long Euro USD since yesterday. Let's see. So I think the Euro USD is actually not too bad of a play. We had a dovish Fed. We've just had bearish news as well. So it makes sense. However, it's likely this move will be corrected. So, and what I mean by that is when we get news and it's normally not what the market expected. So if you look at today's results for ADP, you'll see it was really undershot. So that obviously had a negative effect on the dollar. Now, normally we will see some sort of pullback to correct this move, and then potentially a continuation in the direction that the market wanted to go in initially. So yeah, I mean, we can see here the dollar obviously had a sell-off from the news. We've now had a really nice hourly candle close, nice bullish with the previous bearish candle having a nice wick to the downside. And it obviously respected this sort of support level here. So yeah, don't be surprised if you do see a pullback. However, I think the general idea of buying euro dollar at the moment isn't too bad. Is the euro going to be affected by UK elections? I mean, yes, more than likely. However, by how much, I'm not sure, because the euro is very, very related to the pound. And obviously, if depending on who's elected, we could see obviously Brexit trade deals get fixed or changed and things. So yeah, it could have an effect on the euro. But again, I'm not sure exactly how right now. The Nikkei, yeah, we can take a look at that. I don't trade the Nikkei, so I'll have to just give you some technicals. I've got no not really any insight. To be honest, I am quite bullish on the Nikkei from just generally looking at the Indian economy and how things are going in India. Well, when did I place that? 23rd, so almost a year ago. Crazy. So yeah, I think India is one of those economies that could be doing very, very well in the next sort of 10 to 15 years. So on their sort of indexes or indices, whatever you want to call it, it's still a case of I would only buy it. You know, like I only buy the Dow Jones or US 30, I only buy the S&P 500. So I would still only be looking for buys on this. So looking at this looks quite nice, actually. If we could get a pullback to this sort of fib level here, it would act really nicely as sort of this break and retest. You can see it's been used as resistance quite well. We've broken out. We did kind of had this retest here, so that, you know, maybe have missed the move by now. But we could come back down to this 50% level and then continue to the upside. But as for the driving factors for this, what's upcoming, what's happened, and all that type of thing, I really don't know. I'll be honest. If you want to check India's index, it's the Nifty. Yeah. Okay. Oh, sorry. Yeah, this isn't India. What am I talking about? This is Japan. Sorry, I'm getting a bit mixed up here. So yeah, Japan. Let me just recalibrate what I was thinking there. I've lost my trail of thought. So Japan. Yes, I mean, it's the same principles apply. Still bullish, still would only buy this, and the technical's still aligned, but again, it is what it is. Yeah, sorry about that, guys. That was a bit of an amateur mistake. Yeah, we can take a look at cut. So gold, still the most longed asset on the cut. Let's see, Swiss is the most shorted at the moment. So USD CHF looks like it would be good to go long in theory. The New Zealand actually is the most bought currency. Silver's doing well, oil. So it seems like a commodities market at the moment. We've obviously got silver, oil, and gold. And then the yen, CAD, Russell. Okay, it's quite funny actually. There's been quite a lot of banks trying to, or institutions trying to short the euro yen, and they've just got eaten alive. One of my traders actually counter traded them or faded them, whatever you want to call it, to the opposite position and made a large amount of money doing that. It's quite funny. Yeah, UK election is tomorrow, so just keep an eye on that. It's forecasted for Labour to win. It's I think they've got 40% of the total votes, so they're doing very well, in the lead by a large amount. But yeah, we'll see what happens. So let me see what's on my watch list. Australian yen, not too interested in that. Wheat, I don't know if you guys trade wheat, but I've been watching wheat very, very closely, and I cannot get into it. It's one of those things where I've just missed the move, and it's not giving any type of entry. I've been looking for this pullback to the previous resistance, or sorry, previous support, to test it as resistance, and it's just not having it. So I've kind of given up on wheat now. I think I've missed the move, but yeah, it's still one to watch out for. If I can see a nice pullback, I may take the position. NC is really meant for investing, not trading. Yeah, well, yeah, I suppose so, but not necessarily. Let me see. Gold hasn't done much since I was last on this stream, so we're still looking for sort of break and retest of the previous high up here. I'm not sure we'll get that. Like I said, it wouldn't surprise me if you do see a pullback to sort of the pre-news price and then a continuation. So we may see something more along these lines where we pull back, and then that would also present an opportunity to test this trend line along with these sort of previous highs, small resistance we've got formed here, and then we come up and do something like this. If we could see a pullback to this level here and we get a bullish engulfing candle, this would be a really nice sign for me to possibly execute a long position. And it would be pretty aggressive tight stop. But again, we've got we've got NFP on Friday, so I'm not sure really if it's a wise decision to open a gold trade the day before NFP. Love my boring ranging Forex pairs. Feels like I'm just printing money. Dev, I'm the opposite. I hate ranging markets. Have to trade trends. What about GPAUD, the one you gave early on the start of the week? Yeah, we can have a look. So I did miss this one. Unfortunately, I've missed basically every entry on here. I've been very, very busy with other things, so I'm a bit sort of detached from the markets at the moment, unfortunately. But yeah, I was looking for this entry. So obviously the 50% pullback from the high to the low. I missed this one, which would have been, this would have been really, really nice if I did catch this. It was something along these lines. But yeah, I think the idea of the position is still fine, still bearish. If anyone knows me, I'm perma bear on the pound. The Australian dollar is doing very well, as I keep saying, so it's kind of a no-brainer position. But the roadblock again is the election, because that could provide the pound some strength. GP CAD, we've already covered GP CAD, so feel free to rewind the stream. Gold, we just covered gold as well. So I think, let's see, AUD USD. You can see I was looking at this position, but I was looking at this way before, just too close to the news release. So I was just looking to sort of get in somewhere around here off this 200 moving average, off this trend line. But yeah, unfortunately, it's not quite happened. But again, the correction, if we get a correction of this news, may come down and provide another entry point. But this one looks probably one of the most promising ones on my watch list at the moment. Let's see. I think it's on EDGEFINDER as well, from what I remember. Let me just pull it up and check. Yeah, it is actually. It's here. So that's a good sign. It's a good confirmation to have. So we can see COT is in our favor. Retail is short, so we want to go long. So obviously that's in our favor. Seasonality is bullish. Trend is bullish. GDP is negative. PMI is flat. Other PMI is positive. Retail sales is positive. Inflation is positive. Employment change flat. Unemployment rates positive, and interest rates are flat. So overall, very, very nice. It looks good to go long. So yeah, it's just a case of waiting. And this might be one I would risk to hold into NFP or to trade into NFP. And the reason is because if the data currently aligns, the technicals currently align, and ADP came out negative, which can be used as a signal for NFP, which obviously shouldn't be used as a trade idea, but it's something you could potentially add to a confluence or use as a confluence. I'd be more than happy to hold AUD USD into the NFP. Reasoning behind such Aussie strength? Yes, it's because the RBA is hawkish, which provided strength, just like the Fed is dovish, providing some weakness. So yeah, I think, let me just see if there's anything else I've missed. Dollar yen. Actually, this would have been quite a good entry off the negative US news, but not really strong enough pullback. I really need to see a good move, and the only reason we would see such a strong downwards move on the dollar yen is if we get an intervention. So it wouldn't surprise me if we do get an intervention, and it wouldn't be far away in my books. Now, I'm not sure if there are more interventions planned. I've got no idea, but we have broken above sort of the danger zone. So it was, initially it was 150, then it was 155, then it was 160, which you can see here, hit 160 intervention. Now we're at 161. So it'll be interesting to see if we do get that move, and then we can potentially look for a long position. Yeah, somewhere hopefully off here. But yeah, I mean, I've been in and out of this market quite a lot, quite actively over the past sort of 3 to 4 months. And the mistake I've made, what the conclusion I've come to is that I didn't hold anything. So I was just following sort of my normal swing or intraday strategy, which is sort of, hard take profit, hard stop loss, and let it run. Whereas if I approached this more of kind of more like gold or more of an indices maybe, and just had a really large take profit and trailed stops, kind of like how Nick does it, I probably would have made a lot more money. Just have it, no take profit, just trailing stops up here. I've got a friend actually that's been in since 110, which is crazy. I don't know how he managed to do that actually, but he's still in that position. Very, very jealous of that. In my experience, whenever people think a currency or a bank is hawkish, dovish, that's when the price reverses sharply. Well, Dev, the RBA came out hawkish, I think it was last week, and it's still going. So don't take that, don't, well, yeah, I'm not going to say don't use that, because that would be, if it works for you, it works for you. But, for me, the RBA has been hawkish. It's now bullish. Makes sense. So, yeah. Dollar yen, just waiting for an intervention. Really, there's no other way into this market, in my opinion. Even you can see the ADP just didn't provide enough downwards momentum really to do anything. In other news, euro dollar is now at R3. So if you guys don't know what these are pivot points. So R3 has a 90% chance of not holding. So this is quite an extreme place in the market. So we could see some bearish moves on euro dollar. I am actually short euro dollar on a sort of a very sort of dollar cost averaging. I don't have a stop loss set. I do have a take profit set around here, I think. And I'm just holding this, and I'll just maybe add 1 or 2 more positions on if price moves against me, and then close out maybe at a full 1% loss if that is reached. Shorting any JPY pair is like catching a rising knife. Yes, exactly. And yeah, the institutions have been shorting yen. It's quite funny, really, to see them try and do that. So if we pull up euro yen, there we go. So I can't remember their exact levels. I don't have it on me anymore. But yeah, they were basically trying to short a double top, essentially. There's no other reason they were trying to do this. And the only explanation is that, yes, there was a really large resistance, a very significant resistance on the weekly. And I assume that they were planning to use that as an intervention level and hoping that we could get an intervention by the MOF, which obviously hasn't happened. So I think they shorted somewhere down here, and their stops are quite high, obviously, because they're institutions. They use quite large stops, and it wasn't a crazy position. It was something like a 1-to-1, so it was something along these lines, but they're just getting pummeled. Can you imagine a retail trader taking a trade like this and put it on Twitter or Instagram or YouTube? You would think they're crazy, but for some reason the big players have decided that's a good idea. Yeah, so don't be shy. If you've got questions, feel free to ask them. I'm more happy to answer. Dollar seems to be regaining some strength now. Let's see. Yeah, so you can see the dollar dipped. Yeah, lost actually a lot of strength compared to the other currencies. We see in this period here, all of the other currencies gained strength. The dollar lost strength. Actually, the yen didn't, obviously, but we're not talking about the yen. So yeah, I mean, yeah, interesting. Not really trying sure what I'm trying to say there. Just having a look. Yes, so I'm in pound CAD. Hasni, I'm not going to publicly say who I'm voting for, just because it could swing either way, and I don't want that reflecting on Trading X channel. What's the correlation between NAS and US dollar strength? Well, in general, as a general rule of thumb, NAS is inverse from the dollar. Now, that's not always the case. That doesn't always happen. But if, let's see. So, for example, when we get negative dollar news, that can be positive for the indices. So you can see like NAS here. And it's all related to sort of how the news affects businesses. So inflation and interest rates. So what might be negative for the dollar is that could actually be quite positive for companies and for the indices. So yeah, that's the general rule. But yeah, Hasni, I'm in London. Labour, yeah, I don't disagree with a Labour vote, but to be honest, I think there's a lot of misinformed people that are very racist, that are blaming a lot of things on immigration and on foreign people when they're just very misguided. But anyway, not getting into politics and all that stuff here. It's not the place. FOMC. Let me just check what the news is saying about FOMC. But it's not simple as saying is FOMC strong or bad or good or bad or whatever. It's more. It's at 5. It's in an hour and a half, so that's interesting. Honestly, I have no idea. I can't tell you whether it's would be good or bad. You're gonna have to wait and see, and just not place any trades and not gamble it, guys. I've got just over 2 minutes left, so if you do have questions, please let me know before I disappear. I think I'll be on next week, hopefully, if I'm not banished from the show. More, I appreciate that. Thank you. I like your attitude too. So let's just see. For anyone that has been watching me for a while, I'm still in this Bowden meme coin, and it's essentially dead. I lost all the money I put into here, but you don't invest into meme coins what you can't afford to lose, so it's not a problem. It's just typical. USD up or down? I mean, at the minute the USD is down. However, it could come back up, but of course we've got FOMC, and we've got an FP coming on Friday, so it depends what type of time frame you're talking about. On the larger time frames, it's ranging. There's not really much going on here. Technically, it's an uptrend. We do have these sort of higher lows coming in. However, we do also have a lower high. So, make of that what you will on a technical aspect. Could you quickly explain perma bearish stance on the pound? Lee, absolutely. So my idea on the pound is, let me pull up. Let's do pound Australian because I think that's a good place to go. So the reason I'm bearish on the pound is because there is short-term hope, possibly with Labour getting in, if they do get in, because as I've said, they could fix Brexit trade deals. They're a lot more of a average person friendly government. However, the issue arises when you take a larger scope of the economy and you look at the average person. So a great guy to watch on YouTube, if you're in the UK or if you're interested in the UK or the economics behind it, take a look at a guy called Gary Stevens, I think. I can't remember his last name. Oh, his YouTube channel is called Gary's Economics. He's very, very good at breaking it down. But essentially the point is that no matter what government comes in, they're not going to fix the issues. So we've got an energy crisis, cost of living crisis. The average person can't afford to eat here. There's people that are teachers, nurses, doctors, well, not doctors, teachers, nurses, normal working people going to food banks because they can't afford food. So the overall idea is that this country will not survive. We're not going to have any sort of fighting hope of a long-term healthy economy. Dev, vote Nico Amalana. Yeah, could you imagine if he actually did get in? That would be mayhem. I think that would be. I think I'd sell the pound immediately. But yeah, I think when I say perma bear on the pound, I'm not saying that I'm going to enter a short right now. It's more a case of I'm just watching from the sidelines at the moment, and I may take a short position on the pound on sort of a weekly time frame against an overall strength currency, so maybe the US dollar. But yeah, we'll see. So when I say bearish on the pound, please don't take that away and start selling GBP. That's not at all what I'm trying to say. I'm just saying long term, over the next 1 to 3 years, I don't really see much hope for the pound other than Brexit trade deals and some short-term hope. Anyway, guys, I'm 1 minute over my time, so I'm not sure if the other guy will, if anyone from A1's going to pop in, or I just say bye now. I've not been told anything. So, guys, I hope you all have a great rest of the week. Please don't gamble news, FOMC or NFP, and I will see you all later. Thank you for being a great community, and yeah, have a good night.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
All right, we're back. I feel like we were just here because we were. All right, it's 12:30 p.m. Let's talk. So since I was away, I did talk through as I was, talking about hedging, talking about kind of, I like to kind of hedge for free, and so I found a way to do that for the most part. I'll share that trade with you. I did it on the ES. So the E-mini S&P futures. Dev says, not the stock guy. Well, okay, Dev, what do you want to trade? Are you a gold guy? Are you a Forex guy? I mean, I talk stocks, I talk futures, I talk options. It's just called trading, dude. All right, so I did do a trade on the ES, and here's how I did it. I have a 5,500 put and a 5,400 put. That is a bear put spread. So when Frank comes back on, we can talk through this. But basically, I did the trade. So for my margin accounts, it ended up being, I'm just going to type it out. This is going to be a little bit cleaner. So my margin account, it was a $2 credit. Okay. For my IRA accounts, it was a $5.50 debit. Now you might be wondering, that's a huge difference, right? That's a $7.50 swing. It is. But in the futures contract, it's not super expensive. So a $2 credit with a futures contract is times 50. So I make $100 credit on the trade. So it is essentially, there's still risk on the trade if things go like way wrong, but it's essentially a free hedge. I'm keeping $100 credit on the trade. Okay. But if I am right on the downside, then I have a $4,000 profit on the trade. So for me, I'm keeping $100. If the market goes down a little bit, sideways, up a little bit, up a lot, I keep $100. Fine. If it goes down and gets into my window, my trap for the bear trade, it's up to $4,000 in profit. I think that's a pretty good trade, right? I don't really have to risk anything. I collect credit up front, and I've got a max profit of around $4,000. On the IRA side, the 550 debit, okay, the debit times 50 is what, like $280? $275. Okay, so my hedge essentially is I pay $275, but if I'm right on the downside, I make $4,000 in profit. So is it a fair trade-off? Sure. Why did I have to do that? Because with IRA accounts, it ties up way more capital to have essentially a cash secured or a naked position. So on the margin side, I did a naked put. On the IRA side, I created a large spread, and that allowed me to do a small debit. Okay. All right. So that's a trade that I put on while we were away. I do like this trade. I have the ability for this market from current price. if the S&P were to drop around 8.6%, I'm still in profit on the trade. If the market drops like that, I actually turn this into like a $4,000 position with profit. That's a nice little hedge. That doesn't really cost me anything. And so that was one position I took on while I was away. And then the other one is the FXY. This is the Japanese yen. And I am long. I was long at $58.60. And I put on a hedge today with the bear put spread. I'll talk about that. Let me just spend a few minutes. And then let's talk requests, right? So if you want to, I saw a lot of things earlier, gold, silver, euro, dollar, what's the dollar doing? I mean, we can talk about all this stuff. That's totally fine. All right, so FXY. This is the way that I'm dabbling with the yen. I think right now it is foolish to be trying to short a yen pair. Okay, if you look at all the yen crosses right now, we're sitting at all-time highs in the indexes. This is risk appetite trading. The summer drift is created. We had that disruptive intervention in April. The market doesn't care about these intervention highs, clearly, right? I mean, this is almost up. The Aussie yen's almost up 400 pips above the intervention high. The CAD yen has, I think, eclipsed the highs as well by a little bit, right? CAD's making a nice little run. Oil's up, so the CAD's up about 150 pips above the highs. The Swiss yen has blown through the intervention levels, 175, 179, around 400 pips above the highs. The euro yen has blown through 171 to 174, about 300 pips above the highs. The pound yen, 200 to 205, almost 206, 600 pips above the highs. New Zealand yen, 95.50 to 98, so about 300 pips above the highs. And then the dollar yen is up roughly 200 pips above the highs. So long story short, if you're trading currencies, it sucks to be holding something with the yen long. I did have some traders that I talked to this morning. They are short the pound yen, and I probably did something that scared them, saying this. We talked about this on Monday in the show. I had mentioned that the Bank of Japan does not necessarily act when it comes to a certain price level. What they will do is they will potentially act when it comes to a rate of change. So because we had this intervention in April, if we are noticing right now, like the pound yen, for example, has gone up 7.51%. Now, I'm giving a window here, but about 9 to 12% of depreciation in the yen might be enough to spark another round of intervention from the BOJ. And might is the key word, because if they don't do anything, this is why you look at this currency pair. There is no reason to be short on this currency pair. There is no reason to be short on anything yen unless you are guessing, and I'm guessing that that's going to be painful. So nobody needs to experience the pain of being on the wrong side of a yen cross. If there's no intervention, worst case scenarios, there's an intervention and a flash crash. If some combination that happens, there's no guarantee that you could have a stop loss that's even remotely right. You could say like, well, I'll stop out at 210. Well, if they intervene and then flash up to 220, then dump back down, you're toast. So I've said this all year. Just trade what you see. If all you're doing on the yen crosses is scalping on a 15-minute chart, 5-minute chart, 1-hour chart, and you're trade bullish, freaking crush it. And it's cranking profits for you, which is awesome. So keep doing that. I don't know the timing. I'm not the Bank of Japan. I don't have some crystal ball where I know exactly what they're going to do. Nobody does, right? But historically, when they've been vocal about things, it has been because the percentage change has been so drastic in such a short amount of time. They're willing to step in, and they're more vocal about the intervention now. They did it in 2022. They did it here in 2024. So perhaps we have a couple more episodes of that, right? But until then, and this is why I keep going back to this. I'm only taking exposure here. This to me, I am down $1.30. Okay. So I'm down $1.30 on 100 shares. My drawdown is $130 on a $250,000 account. Not a big deal. If I had a Forex account and I was in for a couple dollars, upside down 400 or 500 pips, I could be down thousands and thousands of dollars by Forex and getting charged every single day, okay, to hold that position. If I was, short dollar yen, I'd be charged every single day from my broker because it's negative carry, it's negative swap. So no, thank you. But what I did do on the FXY, because I have some exposure on this one, is I was just going to put on a collar trade. All that means is I was willing to buy a put and sell a call and basically finance my long put. But to do that, I have to cap my upside at $60. The reason I'm in this trade is to see if this market wants to snap and come back up to like $65 or $70. If I zoom out here, when we had that big correction in 2022, we saw the Japanese yen get as strong as $73 on this instrument. Obviously, we've gone through those levels. This is our intervention from April. We've gone through that level. So I get it. The cleanest trade for me on the FXY is to wait for this trend line to break and then be in that direction. If I want to add options, if I want to add leverage, if I want to add futures market, that's probably the best place to trade it as opposed to just holding the instrument. But I right now, it's like I don't mind testing and I don't mind having a hedge where if this comes down to $50, okay, I can make $8 of credit on that and I can lower my cost basis from around $58 down to around $50. So I can own this, around $52 or $53, and then hopefully we have some upside that allows me to make some profit. So that's what I did while I was away. So the E-mini futures on the S&P took a hedge trade on that one to be a little bit more protected. I'm going to try to do the same thing on the. Let me look at like the Russell, for example. So let's go. I'm going to go micro or the futures market on Russell. I will open up for some requests. What do you want to take a look at? My typical weather report is we look at the dollar index, oil, gold, silver, Bitcoin, currencies. Obviously, I look at stocks. The SPY's up to 551. We're up a couple dollars on the day. Congratulations, SPY. You just inked a new all-time high. So I believe that's 31 or 32 times on the year. The NASDAQ has made a big run, 487 to 490, $2 to $3 on the day, also inking all-time highs. The NQ, surprisingly, I mean, I guess not surprisingly, but let's go to let's go NQ. So we go back to SPY here, NQ here. Oops, NQ. I need to go futures. There it is. So did we get to all-time highs today on the NQ? And the answer is yes, we did. So today's daily push is above the highs. Okay, let me take a look at the Russell. Let me see what that ticker is. So if I go to / these are all my future options here for Tasty. And anyone want to trade some lean hogs with me today? Got to get your pulse on those hooves. All right, where's my futures? There's NASDAQ futures. I think I just have to trade the Russell. There. So 2037, let me take a look at this one, trade-wise. All right, so I can do some options on the Russell. So let me take a look at the Russell. Okay, trading at 2037. I do like the Russell. I think I could also have a similar trade on this if I can get it for a credit. Same thing I talked about before. If I'm going to construct the trade, I would be willing to take a trade where this is where I want my kind of protection. Meaning, for me to generate a credit here, it's going to be somewhere around $1,700. And for a hedge, I'd probably be, below this level here. So I can have this as my bear trap if I want to take that trade. So let me just spend a couple minutes just mulling this over. So that's roughly 2,000 to the downside. And I want to see if I can finance that trade down to like 1,700 or lower. Okay. And then I see a bunch of requests. So we'll go Euro Aussie. Yes. Yeah, we can take a look at Euro Aussie. I'll do a lot of currency pairs. I'll do gold, dollar index, silver. So I'll do a little weather report here. Just give me about 5 minutes to work through the Russell. So we'll go 1995 or 2000 on the nose, see what that's going to cost me. So if I went out, let's say to the end of August, and bear trap would be anything below 2000 or 1990. So if I buy the 1990, okay. Could I go 1990 by 1900? It's not bad. So I could create there about a $7,000 profit if I'm correct. So that would be, so that's a, let's see, a 90 point wide bear put spread. So I pay $18.35, which is going to cost me $1,800. That's my buying power reduction. But if I'm right on this, I take $90 minus the 18, make a net of roughly $7,200. That's a good hedge. Now, what I'm going to try to do is finance this trade so it doesn't cost me anything to place the trade. But to do that, I have to get a little bit more creative, right? So this is an 1830 debit. And if I wanted to, I could go 1990, or I could go 2000 to maybe 1950. I pay a little bit less for it, have a nice little hedge there. But I kind of like the idea of where would I want this thing to run? 1990 down to 1900 gives me a nice little trade on that. You know, that's a big profit. Now, the key is, can I finance it? So if that's two legs of the trade, let me try to see if I go out to September for the quarterly expiration. Could I finance this for enough to make some net credit? And the answer is, survey says, I could probably go down to, fudge. Well, that's unfortunate. I can't go down far enough. So see how my puts here, if you can see the numbers, if I sold a put at 1900, I can pay for the trade, but 1900 is right at the bottom. You know, 1900 is right here. That's not that far away. I'm trying to get this thing down to like, you know, 1800, 1700, way the heck down here. And that's probably not going to work. So instead of September, let's go out a little bit farther. Maybe I go out to the end of the year, which is kind of wild. And I sell this thing at like 1700. Okay, I could do, so this trade I could finance. I could do a 1750 put, but I'll have to spread it now because I have a 1990 by 1900 bear put spread, and then I add to that a 1750 naked put to finance the trade. You can see I make $2.05 of credit. Okay, which would give me, you know, if nothing happens and I keep all the, if price stays above, essentially stays above 1750, I make $2.10, which I'll make $200 by the end of the year. That's fine. But to take that trade is going to tie up $19,000 in buying power. Not ideal. Okay, so let's say if I went to 1800, went to 1800, keep $8 of credit. Could I finance this? Not quite. Could I go down to 1600? That's cheaper. Aha. All right. Why is the buying power so bad? This is brutal. All right. Well, at a glance, there's more ways I'm going to have to dissect this trade because there's no way I'm taking this trade for $21,000 for a freaking Russell. Sorry, Russell. Anybody named Russell? I mean, this instrument's only $2,000. This isn't the SPX is $5,000. I could take the trade less than that. All right. Anyway, let's do some requests. Okay. All right. Let's go weather report. Dollar index. Dollar is. I kind of ranted a little bit this morning in my trading room. I just said, look, there is a bunch of nonsense going on in these central banks. You know, the monetary policy divergence. Okay. The monetary policy divergence that we're seeing where some central banks are pausing, some central banks are cutting, and then we're wondering what the Fed's going to do. And, you know, the dollar, it has been postured since the pivot at the beginning of the year to be bullish. The problem with that is the follow through has been garbage. You know, I mean, we had a bit of a fake out here in the trend line. I just said this morning to traders. I think the best trade in the dollar is stop worrying about it right now and wait for a better trade. Because in my opinion, the better trade in the dollar is if this thing's going to be garbage and chop suey in this like 106 zone or 104 zone, that's essentially what it's doing. You know, I drawn in here 105.60, which I do like that area. But if we can't get clearly above 105.60, it's noisy, right? If we can't clear this high or clear this high, it's noisy. I think the best trade on the dollar is let this thing grind, do whatever it wants. If we get here, I'm looking for a sell trade. Okay. If we get here, I'm looking for a sell trade. The best way for me to make the most money possible on the dollar is to see the fundamentals and the technicals align. That is that trade. Whether this is the, you know, area to be looking for a sell trade on the dollar. It's the top of the broadening pattern. It's a nice little pocket trade. It's good efficiencies. And we'll see if the market's willing to create a trend for us. That's been the issue. I don't see a good trend on the dollar, right? I've seen this posture, but I hate the nonsense of every single day it's choppy back and forth all over the place. No, thank you. So I don't think I'm really going to do much on what I have some trades in the dollar. I'm euro dollar short. I'm New Zealand dollar short. I'm dollar CAD long, dollar Swiss long. Those aren't all, they're not all going to win, right? If the dollar's weak, my euro dollar probably stops out and my New Zealand dollar probably stops out. If I have dollar strength, those all work for right now. But I don't like the Aussie dollar because it's sitting in a range. I think it may have just looked to breach today. It's trying to break this yellow box high right there. Trying to. Okay? But wait for today's close. That make sense? Wait for today's close. Because if today closes with a spike up and it comes right back in the yellow box, I'm not taking this trade. I want to see a daily or weekly close beyond this yellow box to say that's the direction we go. Okay, I don't trust dollar crosses right now. I think they're extremely noisy. And because it's a very low-cost liquid basket, you're going to see a lot of stop punting going on. You're going to see a lot of low-volume crap going on. It's time to be careful on dollar pairs, in my opinion. Okay, so dollar index. Again, I think the cleaner trade for me on the dollar index is if we get back below, and I just say this, I mean, if we get back below 103.90, the dollar could be the sacrifice for the stock market to keep grinding higher all year. I said that in January. You know, usually we don't see stock market up and dollar up. So if the dollar gets weaker because the Fed's going to cut, maybe they cut, maybe they start to cut, maybe today's FOMC minutes at 2 p.m. start to give that hint that the probability of cuts go up. Maybe the market likes it, right? And if the dollar takes it on the chin, then the stock market can continue to melt up and be that, you know, anti-debasing trade, the lack of purchasing power trade, the anti-inflation play. Equities typically have outperformed inflation, right? So my point is there's a couple spots I'm willing to watch. If we get below 103.90, I'm willing to sell the dollar and be way more bearish. Target 1, target 2. If this is garbage and choppy, I'm just going to wait, and I'm not going to force any trades. Okay, if this goes sideways, I'll wait. We either go up or we go down. I don't want to trade the noise. Okay, so the dollar to me, per currency pair, take each trade for what it is. If it looks good, it's a good trade. But the dollar index, just know this, as the index isn't looking that great to me. I don't have a clear set direction, so therefore I think we have to wait a little bit on the kind of basket alignment. Okay, all right, that's dollar index. Oil looks pretty good. I've been bullish on oil. I was hoping to get a scoop up here, so I was long on oil in this run. I was a bit mixed on this. I mean, we have some really nice resistance here and support here. We're right in the middle. But what happened in June was pretty telling. You know, we had this big fake out to the downside, and the bulls just ripped this thing higher. And so I started positioning for bullishness. I have, you know, my stop losses down here. I'm long on oil futures, and I'm long on USO, and I'm long in credit spreads. I'm long in a couple of things, but I think it's higher. It's heading higher. Now, do I want to buy it right now? No. I mean, if we have a pullback, to me, the structure looks like we have if we pause, that's fine. Look for a bull flag and see if it wants to go higher. If we come up here, pull back a little bit, wait for a trend line break, look to go higher. Okay. So I'm positioned for, that's where I'm wrong. If oil stays here, I'm making money. If oil goes up, I'm making money. If oil goes down a little bit, I'm still making money. I'm good at those trades. I think oil has the ability to work back up here, get above this high, test the 90 to 92.50 zone. Okay. Now from here, what do I do with the oil? I'll sell it, more than likely, probably with options. Okay, I'll probably do a crude oil futures trade, do a USO credit spread. So there's a couple ways to trade with different instruments that don't cost a lot of money. Okay, all right. So that's U.S. oil, in my opinion. U.S. oil, you can trade crude futures or crude light futures, which is CL. And I've got the trade right here. It's an August 15th, 72.50 by 70. My max profit on the trade is 160. and I don't really have to do anything outside of just let the theta decay happen and make, X amount of dollars per day. Also on USO. USO is at 81.25, and this is behaving surprisingly different compared to US oil, where this one, I think we have some resistance around 83, but percentage-wise, I feel like USO is much closer. That's about a 2.7% move to those highs, and US oil to those range highs, that would be that's way more than 2%. That's about a 10% move to the highs. That's interesting. So there's certainly a breakdown between USO and US oil as far as the distance to run. US oil can run another 10%. If USO follows suit with that, it's going to start making some bullish looking posture. That's for sure. So let me go USO. And if we get to these highs, USO in a, let's say it matches. Let's say we go 10%. There's your 10%. We're talking about USO at highs in 2022. That's up there. So anyway, I'm bullish. I'm bullish on oil for right now. Okay, gold and silver. Gold is at 23.55. Gold should be performing okay relative to the dollar getting weaker over the last couple of days. I like gold. Okay, I think gold is solid. I took a gold futures trade this week in my trading room. As long as we hold that level, what I'm looking for in gold is this. We're either sideways, and this is a run. This is noise, okay, where maybe this is our indecision, and we look to see if gold can break and go higher later, right? Or what's looking a little bit more apparent is, okay, so we have a high, a lower high, and a lower high, and I'm going to wait for this type of structure there, right? Now, because the bulls got us into this position with that momentum, I would say that the likely scenario, the path of least resistance, would be that direction, right? So why am I watching this closely? Because this could be noisy, right? We could get all excited today about gold being up, right? Having this bottom point around 2280 or so. But to me, this isn't super convincing that the bulls are taking over again, right? For us to get up and us to get into profit where I want to see this trade again, I want to see gold back above 23.75. I want to see it break this little wedge that I'm drawing here, get above 23.75, and then maybe have some runway up towards 24.50 again. If it stalls at 24.50, it's the same thing we've been dealing with. It's resistance, and we're expecting a pullback. But a lot of reasons that gold looks good right now would be if the dollar does in fact get weaker, gold looks pretty good, right? We also have a postured move like so, where if this is wave 1, 2, 3, and this is a corrective wave 4 or a pause wave 4, this actually looks very good for a wave 5. And I don't know if wave 5 is $3,000 or less or more, but that's roughly the round number I'd set my sights on. So from a percentage standpoint, that still gives gold a chance to run. Now it's hard to measure the move when you're at all-time highs. But if we did go, and let's just say the round number is 3,000. If we did go to 3,000, then we're talking about a 27% move in gold. That is a big move. Okay, that's a huge move. But off of these lows that we saw back in 2022, gold is up around 45%. So to go another 20% is not a big deal. But it would be fascinating to see from this low in 2022 to a high of 3,000 that gold is up 85%. That's awesome, right? So for me, I think the posture looks pretty good. Fundamentally, you have a lot of things going on. Central banks are buying gold. Central banks are looking to align their balance sheet with gold, have something to offset the dollar, a little bit more like, store value backed versus US dollar backed. Again, the world is not trying to, the threat is there, right? It's like the world is trying to dethrone the dollar from the world reserve currency. Maybe it happens, maybe it doesn't. It's probably years and years and years away if that is the case. I don't see that being an overnight thing, right? But gold, as it always has been a nice hedge, right? Like it's been a nice inflation play. It's been a nice kind of anti-fiat trade. It has a store of value. It has utility. And there's a perceived value that I believe, like the fundamentals as well as the sentiment around gold are pretty darn bullish. So I like gold long. I am trading GLD with shares, and I'm trading gold futures with options. So I'm long. I'm trying to get long, stay long, and hopefully we are correct in staying patient. And if we get through this little choppy zone here, maybe this is a wave 4, and I'd love to see a push on wave 5 and just ride this thing higher with some stop losses. So that is my plan. Right? I do actually have a covered call on GLD. Let me see what that is. I think I put it like 212. I think I did 230 or 232. Let me double check something really quickly. Here, positions, GLD. Where are you at? There it is. So I have my shares and I've got it covered at 232.50. So if I'm going to get the shares called away, it's all the way up here at 232.50, which is higher, right? That's about a month out. So realistically, what is 21 days out? Let me find out what that is. DTE is at 30. Right now, that call, I collected $1.05, and that call right now is trading for 45 cents. So if I wanted to take the profit off right now, I can. If we have a big old rip in gold, then it's going to threaten my position. But as it stands right now, I could probably sit on this until maybe the weekend. Like sit on this over, through Friday, through the holiday weekend into Monday, and then see if this is decayed a little bit further. Let me see if I have a theta thing on here. So theta shows $2.86 a day. Perfect. So over the next couple of days, let me see here. So let's go Thursday, Friday, Saturday, Sunday, Monday. That's 5 days. I could probably see this by Monday trading at 35 cents. If price stays about where it is, this should be trading around maybe 35 cents or lower. That would allow me to collect about 70% of that credit and redeploy this if I wanted to. And that allowed me to lower the cost basis by a pretty good amount. I mean, I'm essentially lowering my cost basis by about $1.05, which I'm happy with. Okay. So back to XAU for a second. I like this at. So I guess the question for all of you is, how are you buying gold? How many of you are U.S. traders buying gold? And if you're a U.S. trader, how are you trading it? I trade USD GLD, which is essentially like a spot ETF, and I trade gold futures, which is /GC. That's how I trade gold. So I trade the futures market. I could buy a futures contract just to go long the instrument as a speculation. Or what I like to do in futures markets is trade options around it because I can define my risk and have more upside and have a bit more leverage. Okay. If you're a non-US trader, a lot of non-US traders just trade XAU or they trade the CFD for gold. But I don't know what your margin situation is. I'm looking at this as a dollar cost average. So if I were to buy gold now, and again, not financial advice. Okay. If I'm buying gold now, area 1, I would be willing to say this. I would buy more gold here at this pocket, and I would buy more gold down here at structure support. So I realize that if I buy gold now and it goes against me, I'm gonna dollar cost average in. So let's say that my maximum risk is, I'm willing to risk $1,000 on gold. Well, I would probably take about a $300 position here, okay, and a $300 position here, and then a $400 position here, roughly. And if you can trade an instrument that's partial that, I mean, yeah, I can stomach a drawdown, but for my upside potential of another 35%, another 40%, from the 2022 lows to an 85% target. I mean, for me to put in $1,000 trade and have this thing go up towards 3,000 plus, I mean, I could probably turn that $1,000 into maybe $2,000 or $3,000, give or take, right? If I'm using futures, especially, I could maybe double or triple that. But if I'm just long the instrument itself, I probably turn $1,000 into $450 of profit. Okay, so I like gold enough to say I'm fairly flexible on the entries. If I wanted to get some skin in the game, this isn't a bad spot, but I'm not putting a stop loss right there. I'm just going to trade small, and last one here, trade small. So 1, 2, 3. Pick my levels, allocate my dollar amount, and that's going to be my risk. Okay. But my upside is asymmetrical. My upside is greater. So my reward, okay, my reward is greater than my risk. You get it. Risk reward. If you're trading as favorable, awesome. All right. I like gold. Silver. Silver. All right. Silver's trying to make me happy. Kind of. So I'm long SLV. I have some options in SLV. I'm also long the silver's future market, which is /SI. That is right here. So where is my silver trade? So silver right there. So I've got some silver futures on. I've got some gold futures on. I have SLV right here. So here's all my SLV. I'm doing some naked puts. I'm doing a bunch of naked puts. I'm trying to get assigned if I can. I'm up about $35,000 on silver. I want there to be more profits. Obviously, I'd like to take some more ownership. My measured move on silver is to get this thing up towards $35 for round one. And then the next move would be to kind of complete this thing around $48. So I'm trying to get some ownership on silver to take this higher. Now, XAG, target one is 35 and change. Target two is 48. If I go to SLV, slightly different price point, but same type of structure. Price is behaving in a similar fashion. These are all the trades that I have right here, plus my silver futures trade, which is /SI. And all I did on this was a credit spread. So the 26.25 by 26 for about a max profit of $155 to $160. And then I also went out to September for the same type of thing and staggered this out. I did this on Monday for another, $500 some of profit. So if I don't own any silver, these are ways I can still generate about roughly what, $700 of profit over the next month and a half. Who trades silver? Well, I'll show you who trades silver. When I'm up $34,000 in silver versus I'm up $5,000 in gold, that's why I trade silver. To me, it's a better trade. I think it's a better trade. Okay. Will the Feds be hawkish today? Let's talk about that in a moment. All right. So we did oil, we did dollar, we did gold, we did silver. Anybody crypto out here? Where are my Kryptonians at? Seeing some people getting banned in this chat today. What are you guys doing? Bunch of crazies out there. Kudos to the admin team. That's a lot of work. All right, Bitcoin. I do like Bitcoin. I think it's buy and hold to me. It's been an investment since I started participating in 2016, 2017. It's always been risk capital. I realize that all the money I have in Bitcoin could be gone. Like it might never amount to anything. But I have made a lot of money on crypto. I have made a lot of profit. I have pulled out cash. I've kept a base position in, and I'm trying to, kind of maintain that. Okay. So my levels on Bitcoin are 60K to 56K. I think the levels we need to watch, and this would be a bit of a bear trap on Bitcoin. Okay. I actually could take a look at Bitcoin futures. I could take a look at Ethereum futures, but I don't think I could be as creative with those trades as I can with a regular options trade. Maybe I can, but I doubt it. But I'll try. Let's find out, actually. So I think I'm going to look at a Bitcoin futures trade. Probably do there. I think there's micro Bitcoin. Maybe let me find something here. So /B BTC trade. So right now my expirations on Bitcoin only go out to the 27th. Let's see here. Could I do like a $53,000? Well, I guess worst case scenario is this. If this is a false breakout by the bulls, if this is the double top and we break this level, then we're going to be in for a lot more pain ahead if this thing actually breaks the lows. We still have trend line support. I look at this as we've had a nice run. Okay, price is staying here. I'd like to see this $60,000 to $56,000 hold the support and then get back to the highs again. The big question is, can this break all-time highs? Right? There's all sorts of stuff going on now with Mount Gox. Is that like the supply issue that's going on? Like maybe it's not worth as much as it was supposed to be worth, or there's not as much supply in the Mount Gox holding as there was supposed to be. So that type of speculation is kind of dragging on the price a little bit. So let me just look at something here. Can I do a credit spread? Maybe a like 56K spread. Let me look at the chart. So where are my Bitcoin futures at? Right here. I want to get an accurate price feed. We're at 60,000 on Bitcoin futures, and we're showing 60,700 on Tasty. So that's correct. If I wanted to say, okay, so below 56 or 57, I'm going to be pretty tight to this. I could see like a little bear trap happening. So 57,000, maybe this pocket here around 53.4. Let's see what a 53.4 looks like. So 53.4. So will we be higher or lower? So we have $1,000. Ooh, these are going to be expensive. So this isn't a bad play. If I do a spread, I mean, the risk is not great. I don't love this trade. I'm wondering if there's a more creative way to do this. Could I do, let's see here. If we get below 60K, could I sell it? And then, what's up, man? How are you?
Good. How are you?
Good.
It's nice to FOMC you again.
Oh, dude, were you saving that all morning?
Actually, yeah. I thought of it as soon as I got off.
Oh man, I'm in the mood for some dad jokes. That was a good pun, bro. I like it.
Thank you.
Thank you. Oh man, I love Frank's deadpan delivery on everything. I feel like you could deliver the worst news ever and just do it in the same fashion as what you're talking right now. You have any bad news for me to deliver?
No. Well,
no. Okay.
I guess there's some weird stuff happening in the comments.
I do see that. There's some crazy noise in the comments.
But I think they're bots or something.
Maybe.
At least that's what Chandler and James were saying. But
okay.
It's kind of mean.
Well, it's just annoying, dude. And honestly, like I know that when I got the charts up, the chat's there, but I'm trying to just focus on the task at hand. So anyway, I was looking at a bit of a trade to get a credit out of Bitcoin futures. If all I did, well, I think this is okay, actually. I don't love the idea of $3,000 risk, max risk, but around 5,300 or 53,000, if I did a 53 by 52, if I'm right on this, where basically I say, look, if Bitcoin by September, or even a part of this trade, because the bad part about this is I'm not sure why the Bitcoin futures market is only going out to September 27th. Let me look at like oil for a second. If I look at CL and we go oil futures contracts, look at these strikes. You go all the way out to June of 2025. So
why are you trading futures? Why not just look at
count? And it's also a way to use define. It's a way to use defined risk. So I'm trading options on the futures market, which it's just another way to kind of lever it. I mean, look, I'm long BITO. Actually, what I should do on this, Frank, is I have a BITO, and I mean, I bought it at 26.50. It's in a bit of a drawdown. Let me check these positions really quickly, and then I want to hear your thoughts on gold. I want to start talking about some other stuff and take some more requests. So BITO. So right now it shows I've got some owned shares. I've got a call here at 27 and a call at 23, call at 23. What are those? Those are long calls. Okay. So I got a long call at 27, long call at 23, long call at 23, naked puts at 20. I got 200 shares. I'm down about $4,500 on this. Now per account, let me just check an individual account here. So I have 200 shares. I have a naked put, and I have a long call at 23. Well, right now this call is going out to the end of the year into January of 2025. That's okay, but I think if I put on a hedge here, I should have done this when I bought the damn shares at 26.50. I should have put on a collar trade right away, but I didn't. So now I'm wondering, does this get uglier, or is it a bear trap? I keep looking at Bitcoin thinking that we've got a bear trap situation where if we come back to 60K, that's going to kind of test the levels. But I could see the bulls stepping in. We have a bit of a fake out here, and then the bulls step up and take it to the highs. Now, I said this earlier before he jumped on the stream. Perhaps, I know we're sitting here looking at these overbought markets and these overextended markets, but I do think that one trade that could end up pushing the markets higher would be if the dollar is going to be weak, if the market's really going to run. And we might know this today in the next 45 minutes. To be honest, if the Fed minutes release some information, because equities markets have now been closed. So I'm looking at futures markets right now. My equities markets are closed. So I'm looking at futures to trade it. I'm looking at options on futures. But we have a release at 2 p.m. for FOMC minutes. If the Fed somehow gives some type of hint at September, because there is no August FOMC. We have a July FOMC towards the end of the month, but the big expectation is going to be that the Fed cuts in September, right?
Yeah.
So will the minutes release anything different? Maybe.
No, I don't think
so,
it's
though.
gonna.
I don't think so.
You already
Either.
talked yesterday too, so
I know that's true. That's true.
The same words or phrases he uses until we see further confidence, or we don't have enough confidence. It's going to be the same thing. The only time he would mention something like, next meeting we're looking to cut. Yeah, I don't even think he would say that, but leading to something like that would be in an actual FOMC conference, not a meeting minutes.
Very true. Yeah, I agree. And so what is interesting though is that as we've been following this, the percentages are higher. Okay, so this was around 50-50 a couple months ago. Now it's 65 to 27. The market is already anticipating, and possibly this is why we're getting that extra little juice to the upside, is the cut is coming. So September cut, which is going to be interesting because typically when we've seen the markets get stronger, higher through a rate hike cycle, historically speaking, they tend to top out when the balance sheet is cutting and when the Fed ends up cutting rates. So I guess the difference is, and maybe this is the weird thing about today's market, is you have aggressive amounts of fiscal policy and fiscal stimulus to keep this thing running. There's a lot of government spending that keeps us going. The Fed is is not necessarily fighting the government, but the Fed is just letting the markets do their thing. They're not trying to talk it down. They want, job numbers to be solid. They want prices to be stable. But if the market's going to run with this, a weaker dollar could also help ignite a little bit more strength in the stock market as a whole. A weaker dollar, as you and I've talked about, could help for small caps, help for businesses, help for refi, help for housing, help for a lot of things for the consumer. But 25 basis points doesn't mean anything, man. Like, that's what's so silly. It's like, it's like the meaning of this and beyond. So if the Fed cuts, now the market's like they're in full cut mode. And that's what the market might be moving to price in, is like, okay, they cut in September. They're still looking to cut in December. They cut all in 2025 every quarter. Well, there's your 100, 150 basis points difference. And that as a whole, for the markets to be forward thinking, that as a whole is why this market could continue to rally. So it might be crazy. It might be like, oh my God, I cannot believe this market's going higher. But if the dollar gets weaker and equities are outperforming, it is don't fight the flow, man. And this thing just keeps ripping.
I agree with you. I just think, obviously, it's not, I don't think we're ready, and it's not a good decision to cut. The expectations are actually kind of high still for September. So it has me worried. I think you're right, though. a cut is gonna be very relieving to the consumer, because I guess that's the sign that the trend of this inflationary or interest rate pressure is going to come down. Because once we go into cut mode, I don't think we're going to switch back or look to hike at any point after that anytime
Right.
soon. So if we decide to go full cut mode this year, it's going to put some relief on people. They're going to, I guess, feel more comfortable with the years ahead in terms of interest rates and spending power. But I think overall it's not going to be a good sign for us or the consumer in like a decade from now, or even sooner than that, just because I don't think the Fed should step in and bail people out as they always have. And if they do it this early, it's just another instance where they have done that, where they've bailed everyone out. I don't like high interest rates. No one does. But if you look long term, this is a cut right now, or the start of the cutting cycle is not going to help. And if inflation has not trended lower, I think it's housing prices and car prices are still very high. I think there's just a few areas that need to crack. But if those don't, and then we see more relief in interest rates and inflation on all fronts comes back up too, I mean, we're talking about very, very weak dollar. This is dramatic, but this is how empires fail, I think Rome was destroyed with inflation. So let's just hope we don't go down that path, but who knows?
Well, I mean, again, I don't like to get doom and gloom because it doesn't help anybody. I think people will be pleasantly surprised that it's like, we can talk about all this doom and gloom, but it might not mean anything. And the reason why is, if the US is going to crumble, is the world going to be better off or worse off? That's what I
guess
mean.
The whole world will crumble too.
That's my point. So the reality is, it is in the world's best interest to ensure that the dollar or the US economy, we can have a weaker dollar, who cares? But the world probably has to function with world number one, world number two still being solvent and in power and paying their bills and covering interest rate expenses. Like, you can't have world number one or world number two in insolvency and expect the global economy to function and fire on all cylinders. Now, am I talking like, well, you can have a global recession? Sure. But to the degree of what? It's like 2008. I mean, I think that it was such a scary reality that 2008 resources were put into place, programs were put into place, that it should be different. If it happened again in any capacity, it would be different. We've talked about student loan bubbles and auto loan bubbles, and the housing market's ridiculous. But look, people are I mean, I looked at the data for the US household homeowner. The US households are surprisingly solid because their home prices have gone up by 50 to 100% over the last 5 years. Their interest rates on their fixed mortgages, like, we're one of the only countries that have 30-year fixed mortgages. Other countries have 5-year variables that they recenter around current rates. We are super lucky that's not the case. If I lived in Canada, I would be pissed that in 2025 I go from a 0% or 1% loan or mortgage to 8%, 7%. That would be insane, right? And they have all sorts of other programs where it's like, you can do a static pay, you can pay less in principal but more in interest just to stay the same in budget. But it's awful. But my point is, the global economy is still going to need the US to be around, right? Whether we get a little dent in our superiority or not, we'll find out. Can the dollar suffer and everything else looks better? Maybe. But I do feel like it's going to be a struggle to have everything in the US look so bad, be so bad, fail so hard, and the dollar's doomed, and the US economy's doomed, and then see the global economy just hum along like nothing's wrong. I don't think that happens. I feel like we have bigger problems if the US is failing in all capacities, and the global economy, like, it can't be ignored. It's like, it's going to drag everything down with it. So
I'm just
again, that's my
afraid
that's my like defense to the to the doom and gloom. It's like we've got bigger problems if stuff starts to break and fail.
Yeah,
right?
and yeah, it probably. I think the odds of that happening are still kind of low, but
Yep.
regardless of that, I don't want to. My opinion doesn't matter, but I don't want to be living through my 20s, 30s, 40s with dealing with this inflationary issue that was caused like when I was in high school and college, where
Right. But
I
guess
don't want
what?
to be dealing
You
with.
might
I know.
like for your experience as a trader, you might be that person. You're like, look, I remember COVID in 2020, and in the the maturity of my trading years, it's like this stuff was all happening. I mean, Frank, when you're 60 to 70 years old, the amount of crap that you will have seen and traded is going to be amazing. I mean, so it's like I think that's something to be more optimistic about. Obviously, there's a grind, and it's trading, and it's not always easy. But I mean, this market for 100 years has shrugged off doom and gloom and end of times. And look, nobody in 1929 expected the market to be great. Nobody in 1940 to 1945 expected the market to be great. Nobody in 2000 to 2008 everyone felt like it's the end. It's like, but it hasn't been. Like this still remains a machine that cannot be stopped. We're looking at that if the U.S. does anything good, if the U.S. is going to do anything, it's make money. And corporate America is probably the greediest of corporate anything. I mean, all we care about is fudging numbers every quarter to make sure that it looks good enough for our revenue to beat. Beat EPS, but get the shareholders to stay optimistic and stay. It's like that's all corporate profits care about in the publicly traded world. It's like it's freaking cutthroat, dude. So I just think that we have these mechanisms like the SPY or the Qs where look, the strongest companies will just keep grinding the way to the top. And I think what's going to be interesting is, do we have over the next maybe 5 or 10 years, do we have a new Amazon emerge? Do we have a new Apple emerge? Do we have a new Google emerge? Because maybe that's the struggle moving forward, is these companies are so big and so moaty, meaning like nothing can dent them, that they can't just keep growing at astronomical levels. And so that could be like the overall slowdown is all of a sudden Apple, Google, Microsoft become value plays, right? And they produce a whopping 3 to 4% a year, 5% a year growth. It's just like boring, but it's enough these companies just keep taking over. But on the flip side of that, I do wonder if like small caps have a chance to be better. Like think about how much more productive a company could be now in the, we'll just say for the buzzword like AI space. A small cap company can get involved in the crypto space, can get involved in an AI space, a data space, and they can do so much more with resources at their fingertips, and have, one person can probably do the content or the research of 5 to 10 people. I mean, I've watched several videos on how to improve like chat GPTs, and there's chat GPT 4.0 now. I mean, it's not truly generative. But man, in like, an hour, you can actually hammer out stuff that would be like quality, Wall Street research analyst. Like it's amazing what you can pull out, and you can do it in like, I'm not a Wall Street analyst. I don't work, inside the scene. I'm not. So, but I have that available. So anyway, my point is maybe the big stuff, it just stays big and stays solid. Doesn't really crack, doesn't really grow. But then you have the small caps that maybe have a chance to catch up. Maybe. Now, to do that, you'd like to see those small caps have a better chance to borrow, because if you look back to the early 2000s, Amazon was down over 90%. If Amazon didn't have zero interest rates to borrow, Amazon wouldn't exist. There's probably a lot of companies that we have now today that are massively profitable companies that back when they started, back when they were grinding through the tech phases and kind of proof of concept, probably needed a ton of cash to justify doing what they're doing. And that's usually that's always the crux with tech, is they borrow. They put all the money into R&D. They put all the money into growth. That's where their money goes. It doesn't go to profit. It doesn't go to dividends, right? They're just trying to fund and grow, and it's revenue that everyone invests in. It's future revenue that everyone's invested. is different now. I think the investors now, like, they want to see cash, they want to see low debt because it's harder to manage debt now. So anyway. All right, Frank, what do you got for gold? You mentioned gold early in the session. Let's hear it.
So first, I want to talk about PMIs.
PMIs.
Services came out this morning.
Yep.
The U.S. is primarily a services economy.
Yep. That's a big miss.
And it was a pretty bad miss. It was a contraction for the first time in a while, or I think it was the second contraction for the first time in a while. Yeah, so May was the first, and then this month was even worse.
Yep.
That's not a good sign, but I want to talk about gold and the market. So gold went up because I guess this is what I'm thinking is you see poor economic news. That's what gold tends to thrive off of.
Mm-hmm.
In the markets, you see this kind of poor economic news, and what you would think would be bearish, it was initially like in the first 5 or 10 minutes of this news coming out, ended up being a pretty bullish play on the day, because I think what people are trying to look for is any incentive towards those rate cuts. And I don't know if the Fed Watch tool changed at all today. I'm curious to know if the expectations increased as a result of a worsening PMI number.
Right.
But either way, you see bad news and it's almost like it's good news in the market. You see bad news in the US, it's good news for gold. So I think they both have a chance of sort of seeing some upside. I'm still holding GDX. It's kind of at break even now. I added to it though about a week ago. So things are okay, but
yeah.
I think gold is a good catch-up play just because it's been kind of quiet.
Yeah.
But I think to your point earlier when you said weaker dollar, I think if these expectations stay, regardless of whether or not it's good for the U.S. economy, if you see a rate cut, if you see the path of the rate cut trend start this year, that's really bad for the dollar. So anything bearish dollar is probably going to be good for gold, and the market, does its own thing. But yeah,
that's a great point, dude. And so give me some levels on the dollar. Okay. So I continue to go back to my charts. 105.60 is my resistance level that was broken and breached, but it can't stay above it. So I'm just like, I'm not long the dollar. I'm just kind of mixed on the dollar. I think we have a range, man. I think that this dollar ranges, but I am absolutely looking for, if like you said, if you think the dollar is going to get beat up, dude, a break below 103.90,
102.
I mean, 103.90 to me is a break, and if we get to there, I'm going to 101 or lower. So you're looking at 102. You're actually down further than me. Then is that your target or is that your break?
It's not my break. It's where I think it's going to go. If you're looking at, if you go to the weekly chart on the dollar,
are you going here? Is that why you said 102? You're looking at like that low and that low. Is that your 102 zone?
Yeah. Okay. I'm just using these zones right here. I think 102s, I guess I should have specified because there's a lot of area in 102.
Sure.
But I do like this level here. And that's partly because, so this is when the Fed started raising rates. The dollar was, it had several months of upside, but we're not going down to 0%. At least that's what is expected. By 2026, I think we're supposed to be at 3 something. So if we're around 3% in the threes by 2026, I can see the dollar being somewhere around here, somewhere in the 102s. So I think choppiness maybe, or I can see it in the short term, but I think my target for it is somewhere within 102 by, I guess, 2026.
Okay. So you are looking at DXY weekly. All right, let me take a look at that on my chart too. So DXY weekly. How far back are you going on that chart there? How far back is that? Is that with your little Bollinger Bands?
This is looking back to like November 22.
Okay, so you've got way less lens than I do. Okay. I was
How
just
far are you
curious.
looking back for?
Well, dude, I'm going to go back to freaking 2001. I mean, I'm going back to, 1985. Like, I want to see, to me, this dollar is not necessarily done because we're still in what has been a pretty solid uptrend in channel. So
is that 2009?
Yeah, and all the way back to 2001 and all the way back to 1985. I mean, there's a lot of feet on the DXY, which is why I love this instrument. So, I mean, the dollar has been as high as 121. That was back in the early 2000s. The dollar has been as high in the 80s as, 164. Now, do I think those levels are going to happen? Probably not. It's way too much liquidity. There's way too much, I guess, competition now. There's way too much nonsense of what the Fed's doing, and there's fiscal and monetary policy, and they're all over the place. But what I think for right now is based on this dollar. I mean, and that's why I think the trend line you have is valid, right? So this kind of changes my optics a little bit where, I saw this swing to the downside, and all this talk about weaker dollar makes a lot of sense. And it would have made way more sense to me if we would see the dollar, because it has been one of the better currency pairs as far as carry and swap. And the U.S. is a stronger economy. The U.S. has been the one, pausing central bank that didn't want to cut. Still kind of doesn't want to cut, but at the same time they do. Like, the Fed's going to freaking cut probably in September. And maybe it's a consumer like sigh of relief. Maybe it's a little politically motivated to get the market to continue to juice and rally for the rest of the year. I can totally see that playing out. But if I want to sell the dollar, dude, I would love to sell the dollar higher, not now. I don't want to sell the dollar now. And again, I'm being picky here. But if the dollar can somehow just stay not crappy and give me a better level to sell it, I'd love to see that type of trade where we come back into equal lows or we come back into some type of broadening pattern. And this becomes a symmetry play, high to low. And we have all this correction here. And when it finds the top, it goes high to low and hits symmetry. That's what I'd like to see. But I don't know. I mean,
what would make it continue higher? I know you're looking
every
at
other central bank cutting first. Other central banks cutting first. We've already seen it. ECB cut rates, BOC cut rates. If the Bank of England, after the elections this weekend, if they cut rates, it's like, if the Fed's not going to touch rates until September and we have cuts prior to that, it is possible the dollar still gets bid, right? The Fed cuts, well, now all of a sudden it's the cut cycle and who's going to go lower faster, right? If the Fed's going to cut September, cut December, good or bad, I don't know. But I just think that right now the dollar is pseudo attractive because we've already had cuts from Bank of Canada, ECB, Bank of England is likely on tap. I think the Bank of Canada and ECB will probably look to still cut rates. Swiss National Bank has cut rates twice. So that's what I think can keep the dollar pseudo bid and resilient. I don't love the dollar, but I'm saying if I'm going to be a dollar seller, I'd much rather sell the dollar at a slightly higher level. Give us a nice topping pattern, get some nice structure, and then have a freaking trend. I think my least favorite thing about the dollar right now is like it goes somewhere for a week and gives it all back, goes somewhere the next week, gives it all back. It's so hit and miss. It's so choppy that it's exhausting to watch it. And so I'm not even saying that the dollar basket is easy to trade because each individual currency pair is a mess, right? Like today's a good example. It started out quite bearish, and then you take a look at your currency strength for the day. It started out bearish and has pulled back off the lows. So, again, the dollar's still down on the day, as is the Japanese yen. But, and again, that was on the PMI news, right? So we had PMI news immediately reacting the dollar. And then by, this is your 8:30 breakout, dollar gets weaker. But we pivot here by 10 o'clock and we scale some of it back. So I just keep staring at this chart like I'm going to stick to my guns here, man. 105.60. I'll keep watching that level just because if this puts in an intermediate low and we start getting back above 105.60, I still think this stupid dollar wants to grind a little bit higher. But this is the trade-off. Dollar strength, if it keeps going, dollar strength shouldn't necessarily translate into a stock market rally. Okay. We have an already overstretched market in the stock market, right? Like everything's overbought on the weekly chart. We're getting RSI levels getting hit on the daily and the weekly chart. Those combinations are very strong. Now, I think the probability of a pullback is high. The dollar might have nothing to do with that. But if the dollar does gain some traction here, that probably puts pressure on the stock market a little bit further. That's kind of my play in correlation right now. If the dollar gets weaker, then we keep seeing overbought conditions and this market stretches and stretches and stretches, and maybe nothing can stop it until new administration in 2025, right? Like this market might have the biggest blinders on. It doesn't care about anything other than grinding higher. Go higher, go higher. It could be broad market. It could be thin market. It could be narrow. It could be highly concentrated. It doesn't seem to care right now, you know? So that doesn't make me a permabull. I'm just saying, like, I am, you saw it today, like I'm hedging. I'm trying to protect my portfolio for anything stupid. But in the interim, I don't want to pay an arm and a leg for all these hedges that might not work out. That's the one trade-off is if I wanted to hedge and protect my portfolio, I try not to do it where I'm overpaying for it because that's money that I could be wasting. That's wasted money if you just pay for a hedge, spend $1,000 to protect your portfolio, so you think you just waste $1,000, right? Because it just comes off your bottom line profit. So anyway, that's the weird stuff, man. Is like I don't like how the dollar's behaving. It's been driving me crazy. I said from the beginning of the year, you know, I was bullish going into the end of the year, into this year when we pivoted here to 101, but it has been freaking garbage, man. Since like March, April, we can't really get any direction on the dollar, and it's driving me crazy. So
Well, just buy stocks. That's the only thing that's going
that's what
up.
I'm doing. That's what I'm doing. But
by the way, I'm seeing in the comments, why is it paused? The market's closed early.
Yeah,
today.
market closed at 1 o'clock. So the U.S. equities is closed.
Yeah, we got July 4th tomorrow, and
Correct.
I guess in observance of that, they're closing early. There's no it's not an alarming thing. It's not about to explode.
They halted trading. They halted. No, it's because they closed at 1 p.m.
Yeah, the day's over. They ended it early, so we'll open back up Friday.
Correct.
But yeah, this is where honestly a great close for NAS. Halfway through the day, we're up almost 1% on the day, breaking all-time highs.
Yep. Qs did too.
Yeah,
Qs broke all-time highs. SPY broke all-time highs. Look, I mean, that's a pretty convincing run, dude. The Qs are up, and not just like, I mean, the day itself. This has been a pretty good rip, right? Day itself from 486 up to 490. That's a nice little $3 to $4 move. If you go to the all-time highs before that, I mean, you're up 0.8% closing higher. That's a pretty convincing push. And I get it. It's a holiday and it's thin and nobody's really shorting it. I'm a little bummed that my trade this morning on the SPY, that's not the risk graph that I want. Let me close that down. This guy. I had said that when we started out trading this morning, this is around opening bell. I was looking at a 450 long call. I just said that was a big gamma level. What's kind of interesting here, Frank, is I can't take the trade right now because market's closed. But I think by Friday's open, if I have a chance, okay, if I have a chance on Friday with non-farm payroll, I might put in a 553 long call on the SPY and see if that gamma gets tapped. I did that last week at 458, and it ran all the way up to 550 and change. 64-cent debit into $2 and change for credit, which was a great trade. That was an easy position just on a gamma squeeze. So I want to see how this lights up on Friday. If it gives us something to really play. But anyway, just
I can't even watch non-farm. I don't think NFP has not told us anything because the numbers are so crazy and the revisions are just as crazy. You don't know what is happening in the jobs market unless you look at private payrolls, which is ADP, which came out today, is a steady decline since what was it, like last year, which is great, which is what the Fed wanted. Seeing that it is steady though, we substantially declined from last year, but we're kind of steady now. I think that's kind of where the Fed wants it. They don't want the jobs market to crash, but they want it to be lower and stay lower for a while. Bring down those inflationary pressures. I think what's more important is looking at our unemployment rate and our average hourly earnings, which is a key sign in inflation along with PCE and CPI. If we can see hopefully lower numbers, I think that's what the market wants to see. That's probably the only good economic number that investors want to look at. Everything else, like PMI, GDP, they want to. I feel like they want to see lower numbers because it may lead to less spending, less money in the market, lower inflation. So if we can see earnings come down, as in lower than forecast, we can see unemployment rate stay steady, hopefully not skyrocket.
Right.
And NFP is going to cause a lot of volatility at the beginning, regardless, but it's probably not going to tell us anything. And I'm more curious about last month's revision than this month's actual.
That's a good point, because the revisions have been quite wide. If you look at, let me get rid of this little drawing tool. So let's go to the non-farm payroll number and take a look and see how. So 175 revised to 165, 303 revised to 315, 275 revised to 270, 353 revised to 330, 220. That was the big miss right there, right? We printed 353, and then the next month revised it down to 229. That's way off.
I don't know where they get their numbers from.
Well,
I don't
dude,
know
it's
how
not.
that makes any sense.
It's not as bad as Canada, bro. I mean, I don't know if you ever watched. This is a typical combination where you have non-farm payroll for the U.S. and CAD numbers. I've seen Canada. Take a look at these numbers. So forecast 15K come out 150K. Forecast 5,000 came out 104,000. 11K for. I mean, these numbers are 5x off, 10x off. Canada's way worse than the U.S. Right? U.S. is bad. If we're missing by 50K or 100K, that's way off. Canada's like, we missed it by 1,000%. Sorry. But obviously it's a way smaller economy compared to the U.S. and,
Well, you kind of wonder who's counting.
I don't know. I mean, I watched the South Park episode. It's probably the, is it manatees, right? They just pull balls and like float them up to the top, and that's our non-farm payroll number.
I don't know, but when in doubt, South Park is usually a great reference to reality.
There's so many. Well, I mean, I'm voting the South Park method for the election. That's for sure.
Which
you watch that
would be what?
The election is the two candidates. One of them's a turd sandwich, and the other one is a giant douche. So pretty much what we're dealing with.
Fair enough.
Yep. So, and then the manatee one was actually how Family Guy writes their episodes.
Gotcha.
So, but I could see that being the economist here in non-farm payroll land. All right. So we have numbers. We got 12 minutes before the FOMC minutes drop. I just want to see. Let's go. So,
which, by the way, is it really that big of news? Is meeting minutes really gonna be that crazy today?
Nothing's open, so no. I mean, we're gonna see the news. We're gonna talk about it. We'll see what the headlines read, but nothing's open, dude. I mean, the only thing that's gonna move is maybe Forex, and it'll be low volume. So perhaps the dollar for the day maybe has a bit more of a reaction. But the only thing I can see tradable is if you maybe have some futures market available now, but it's probably gonna be Forex crypto maybe if we're moving. Everything else is gonna be the whole day's put on pause. We had a shortened season or session. We have tomorrow off, and then Friday we resume. So if today matters, it's going to reflect. It's going to be reflected in like the pre-market movement on Friday or the opening bell on Friday. Yeah. So I think currencies are really like the only game you got to trade right now is going to be FX. If you want to see a movement, is look for the dollar index, look for FX crosses. So
I always like making predictions. I don't think this is going to do anything. I think the pre-market moves are going to happen, but it's going to be because of what we have on Friday before the market opens. So I think today's
so 8:30 non-farm will get pre-market more so than this.
Yeah.
Yeah, I think you're right. Look, I don't think the Fed is not going to matter until September. The Fed is not going to matter until September. Period.
Right.
Now, what I wish I did this week is I wish I would have looked on Monday to see where this CME watch tool is at, because this is up from where I recall it last time. This was sitting around, 55%, 56%, 58%, but it's slowly inching higher, which just means, and if this gets high enough, Frank, rarely do we see it go to like 70, 80% probability and then freaking dump the other way. So the fact that we're at 66%, I feel like this market is pretty confident right now that Fed is not going to change and switch to go from all of a sudden no cut. So I think the market's expecting it. You got to give the credit to, if the market expects it and it runs with it, it could be getting priced in. If the Fed does in fact do it and looks to do it again in December, and they justify in the September presser that it's did I say justify? If the Fed justifies the rate cut in their September press conference, that is enough to make the market like, holy crap, like this cut cycle is starting. Now, I think logically that the market should want to keep juicing everything they can out of it to get as much out of this year as you can. Like if this year just pumps at 20%, 25%, 30%, it's another gangbuster type year. The issue would be if we have 15% gains or 20% gains going into the September rate decision, and then we give it all back. That would be, I think, a terrible outlook for 2025. Would be all this potential profit and then a reset at the end of the year. That's what happened in 2018. 2018, we had hikes all year, every quarter, and man, that market just freaking dumped in December. Everything was good until then. 2017 was bullish every single month. 2018, the market ignored the rate hike cycle until the end of the year, and it absolutely tanked. And then the Fed had to step in and basically put in their backstop in 2019.
I remember that.
Yeah, it was a wild year because 2017 was not a fast volatility year. It was only, the year itself was only up like in the teens. It wasn't like a crazy 30% year. It's like I think the S&P was up like 12 to 15% that year, but it was like partial 1%, partial 1%, 1%, 1.5%, 1.25%. So anyway, my point is this market might try to juice as much as they can out of these gains, but I could see a very swift profit taking, recorrection, the reality of like this inverted yield curve and this recession, and like it's as good as it gets and everything's priced in. If the S&P PE ratios are starting to stretch to 28, 29 times earnings, that's also a scary time where we've hit those levels in 2008. We hit those levels in 2000. Those are scary valuation levels that are unsustainable.
I think if the Fed does cut, that's the big catch-up play for the small caps.
Yes.
And that's going to help prop everything up further. That's going to be that increasing likelihood of a melt up. Yep. But it's not going to be sustainable. It could create like a crazy year for us, like in terms of market gains.
Yes.
But like you said, I remember a few weeks ago, we were talking about 2025 being kind of dull. I think you're right there. I think once we get past this Fed hurdle in this election year, things aren't going to be really the same.
Yeah, this isn't a normal year, right? Like this is not business as usual. There's too much at stake for who's going to be in power, maybe some changes to policy, maybe some changes to administration. All these things are up in the air. Again, we've got to give the market a lot of credit for ignoring a lot of this crap because it's a lot of junk that it's digesting. But to your point, and how about this? Let's make this actionable, okay? If the IWM, the catch-up trade that I see for one of the best catch-up trades index-wise for the year is going to be the IWM or the small cap. So the RUT, the IWM, the IWX has already kind of run with this because that's the top 200. But this to me is where the catch-up trade really kicks off. This is where that kind of big rip we had in October last year. So easy trade would be the split spread that I like to do, where I would just maintain a bullish outlook instead of going both directions. I just do bullish outlooks, and I would do IWM week after week. I would stagger these trades every Monday. All right. The plan would be if I go IWM trade. So let's say that we're getting in, and how do I know this is happening? Obviously I don't. But if we are looking at this IWM breaking, let's just say, my chart alarm at 210. If we break above 210 and we have a catch-up trade towards like 20% to hit the highs, every single week, I am trying to get as much out of this as I possibly can. So from the high, that's about a 13.5% gain. From the current prices, that is close to 20%. That is 21%. Okay. So if I went into the market on a week-to-week basis and stagger these out, what I'll probably end up doing is maybe a 10 DTE or days to expiration. And let's just say it's the trade right now. Okay. I can't take the trade because options are closed, obviously, but I'll price it in. So if I went out to not this Friday the 5th, but the following Friday the 12th, right? Let's and again, hypothetically, put on thinking cap here. Today's Monday. Let's say today's Monday. So I look at the IWM and we're trading at 201.82. Let's just call it 202. I'm going to go down $5 in the money, and I'm going to try to buy roughly a 70 to 75 delta long call. So I will buy, let's say this at 175.50. I can't. Okay, so there's my position. So I can buy this here. I am going to be around $4.50 of intrinsic value that I'm paying for, and I'm only paying a little bit more for the time in the trade. So if I did this and this thing is ripping higher, what I'll probably do is if I buy it in the money and then I sell it, I can make it equidistant, and this would be roughly $5 up. So I sell the 207. So for $4.73, I still give myself about $5 of upside. That's a 1-to-1. Okay. I could see this trade working week after week after week with a rip higher where I could probably make close to $500 a week over what? If I did it every Monday, and this takes a couple of months, if this is a Q4 move, for example, this is, we cut in September, the market loves it, and we are declining for the September effect. And all of a sudden we put in a bottom September and it rips all the way through the end of the year. So if it was every week from October to December, and this is all we had to do, I mean, there's probably several $1,000s of trades that I could, or profits rather, that I could make. So just saying, I'm trying to turn it actionable, because you're right. If this is the relief rally and this is the catch-up trade, this is the broad market that everybody's been talking about if it comes to fruition, right? Now, that's a big if, and the Russell's also the complete opposite. If they don't cut, or they disappoint, or the market talks it down, or they jawbone it, this Russell is, very vulnerable to coming back to 165 if the market doesn't like anything. So anyway, yeah. I think the catch-up trade is great. I'd love to see it happen. There's nothing more exciting than being able to have a direction and be able to make money pretty consistently without a ton of hard work, right? If you're invested, if you're active, pretty easy. Direction's up, just benefit from it. That lifts everything. That makes life a lot easier. I will say that if 2025 isn't like that, and it's not all rainbows and sunshine and Skittles and whatever Cadbury eggs, you got to know how to trade. So I mean, it's nice when it's like everyone that's a bull market genius can make some money and it looks all great and it's the easiest thing ever. But the reality is, if it wasn't for times like this, traders would struggle most of the time, because most long options expire worthless. Most of the time, the stock market isn't always just melting up higher. I mean, we've literally had 3 stocks carry the entire index higher. That's not the same. But if you buy the SPY, great. You buy the Qs, great. ETFs make your life a lot easier. You don't have to be a stock picker, So anyway, I just thought it's a good conversation, simply because I have a plan of attack. I think if we have the opportunity like we had in 2023 last year's quarter in Q4, man, it was easy money, dude. I was up. Most of my year was built in Q4. I was very patient, and I'd say levered. It would be one way to put it in Q4. So it worked out pretty well.
Well, honestly, the way things are going now, I hope you're right. I hope it continues. I hope we see, a spectacular end to the year.
I do too.
That being said, I think the higher up we go, the worse it is for us in terms of downside.
Sure.
But, you can't wait for that event to happen. If we're going to have 3 months of upside, I'm not going to be shorting the market.
Exactly.
I want to be on the side of the bulls.
Yep.
Unless something breaks, like if the Fed hikes, which they wouldn't, but that would be the end of all these profits, dude. If the Fed all of a sudden loses its grip on inflation and the market just balloons up into a bubble again and inflation gets nastier and the Fed has to hike by another 25, 50 basis points, bring on the recession, bring on all the BS we've been thinking of. There have been bears that are smart people since 2021. They're still bears, dude. They're just waiting. They've been beat up and they're just sitting in the background waiting to step up again, but they're there. And I feel like the amount of power and leverage and black box trading that would go into a bear market would be nasty. I think 2022 is like, how long can you wait?
Ask Ray Dalio, dude. The guy's got, Bridgewater has $100 billion or more. And what do? Is they parcel it off into all these different funds where it's like one fund is only bearish. So that fund can get its ass kicked for 5 straight years and then eventually make it all back in 1 year. But the other funds are just trying to do their thing and not lose. And at the end of the day, it's like you're just out there making a few dollars. You're out there kind of preserving capital. But bear funds, bear markets make a killing when it's time. But dude, I mean, would you want to be wrong for 3 or 4 years before you get it right? I wouldn't. It's exhausting, you know. And I don't think that's how I'm going to make my, you know, any reputation I have in the industry as a trader is not going to be a black swan trader. You know, look, it sounds freaking awesome, but the probabilities on all that stuff is impossible to know, right?
I will say this though, when we get into this, or we're already in the second half, but as we go through this second half, I am going to be a little bit hedged. Like, it may cap some upside if we see it, but I want to have a little bit of a short just in case things go sour. And I think that's honestly a fair tactic. I know it's not.
It's appropriate.
Completely bullish.
It's appropriate for sure.
I want to be more weighted on the upside, but just in case, you know, maybe out of the money puts on things like a long-term call on the VIX, but a very small percentage of my account.
Yep.
Just stuff like that, just in case. But mostly I'm looking for upside. And as ridiculous as it is, who knows? It can go forever. Not forever, but it will seem like it sometimes.
It'll go longer than people think. That's what it always does, man. It's all like these stretches go long in the tooth, and it's like, I cannot believe the market keeps going. But that's also the pain trade right now, man. Look, traders are smarter, right? Traders have tools, they have resources, they know chart patterns, they know liquidity levels, they know supply and demand. So what's the pain trade? When stuff doesn't make sense. Why is it still up when it's overbought? Why is it up when it's still diversion? I'm seeing all these price discrepancies. There's no way. That's the pain trade. Longer than you think, higher than you think. Why do you think people get burned on the Japanese yen so badly, right? The stock market is no different. When you're trying to call tops on everything pointed bullish, you're guessing. And so you're right. Like, just stop. Like, stop fighting. Stop swimming upstream. If all the evidence that you see, if you bring over your partner, your brother, your whoever, bring somebody that knows nothing about a market and show them a chart. If it goes left to right like this, if it's going up like that, is that person going to say you should sell it? Or if you just ask them what direction it's going, they're going to say up. It's not that hard. But look at what we know. It's like we know too much, dude. Keep it simple. Don't fucking fight it. It's like you're just gonna make yourself mad when it's like, I was right, but I was wrong in timing. Okay, well, how much did it cost you to wait? How much did it cost you to be right 2 years later, 1 year later, 6 months later? You know, I know that in March, here's how quickly I learned. Okay, March, I felt like we're getting overextended. I'm gonna look for some bear positions. I easily pissed away $2,000 or $3,000 trying to call a little correction that I got in April, right?
This news just came out. I'm sorry.
No, it's okay. I'm looking at the headline news here on Financial Juice. So I did see the first headline was several participants said if inflation were to persist at elevated levels or rise further, Fed funds might need to be raised. Classic, like they're talking both sides yet again. You know, let's see what happens with Watch Tool. There's nothing to trade right now. So just take it in, let the market digest it. It's the same crap they've been saying for months. So this doesn't change anything. The Fed's still going to be priced in with a rate cut. If they cut in September, they cut in December, it's all the same stuff. Do you see anything on here, the real-time news that we should be paying attention to? Emphasize further demand weakening could generate a larger unemployment response than the recent past. Policy should stay steady to respond to unexpected economic weakness. May's CPI reading was seen by participants providing additional evidence to progress. I mean, that's right there is literally two separate angles, right? Inflation were to persist, Fed funds rate might need to be raised. A number of participants said policy should stand steady, right? Many saw the CPI reading as evidence towards progress of an inflation goal, which is 2%. So even yesterday when I was on with Nick and we were listening to the ECB forum, even Powell said into 2025, inflation is probably going to be at 2 to 2.5%. Okay, so Powell's not expecting sub 2. It's like, so how dovish can the Fed actually get if they want to maintain this like somewhat pseudo restrictive policy where the market doesn't get ahead of itself or consumers don't get ahead of themselves? It's like it's a slow deflation. Like it's a slow bubble burst of the inflation bubble. It's slow. It's like the air's being let out. It's like a big balloon that the air's just slowly being let out and that inflation is just coming down. I think that's better than like just pop the balloon. That's where it gets like booms and busts. And so I don't know, man. I mean, maybe Powell's a genius. Maybe this Fed administration is going to work it all out and it's going to be perfect. But I don't see that ever happening either. There's been way too many broken things in the market that the Fed has to fix, as opposed to the Fed nailed it. I don't think they're that much smarter.
Yeah.
You know,
either way, it's the same thing, same old story. Nothing was said. Markets aren't moving; they're closed. The gold price is not moving. Minutes has probably done nothing for volatility. I think what we need to look forward to is Friday. See what, not NFP, in my opinion, but what wage growth does and unemployment rate. But yeah, the Fed, you're right. It's not going to matter till September. So I don't know. I just keep seeing the same thing from the Fed. I don't think it's going to change until we get to September is when we'll actually know. Because I don't think he's going to say anything.
he will not.
He'll never hint towards anything. It will just happen.
Yep.
So
and
I
look,
don't know.
And the hint, right? The hint is this. This is where the market turned to say, look, the market is not dumb. The market prices in things ahead of time. This has been shifting all year. This went from, I mean, this is insane to think about, but the market expected 7 cuts this year. We're maybe talking about being happy about 1. The Fed, through all this, is probably looking at 1 to 2. They still don't know, right? I mean, if the market's anticipating December, right now they're looking at a 4.75 to 5%. That's only a 50 basis points difference. So do they cut twice? Maybe. But that doesn't mean going into 2025 that they're going to keep cutting every quarter. They could, they probably should, they probably will, but that's not a good thing either. Because if inflation doesn't actually get sub 2%, there's no reason for the Fed to be down at 4%. Like we're at 5.25% and inflation is arguably at 3%, right? True inflation has it at 2.15. The CPI data comes in year over year at 3.4, 3.3, whatever. We're at like this 2% restriction. So if we start cutting and inflation stays sticky at 3%, we're actually chewing into that buffer of restrictiveness, right? So it's like, again, we look at, you look at the CPI tool, it's been steady, 3.1, 3.2, 3.3, 3.4, 3.3, 3.4. We can't break that 3% right now. And that's the sticky inflation. So I think it, like we talked about, dude, it's a bit of a relief just to know, like, hey, consumers, we're paying attention. We understand that borrowing is different. We understand that, you're struggling to, see affordability in the housing market. We understand that, your wages have not gone up 20% or 50% or 100%. And so wages are not keeping pace with true inflation. When houses are up 50 to 100% and you're not doubling your salary, you can't afford a house anymore. When interest rates go from 3% to freaking 7%, you can't afford a house anymore. That's a big deal to the U.S. consumer. That's the American dream right there, dude.
Yeah.
Equity. So if you don't have it and you're sitting on the outs trying to freaking rent and have nothing to show for it, that sucks. So I think it's a little bit of pat on the butt for those consumers that have been waiting to maybe make a move in a house, have an incentive to look to buy again. Maybe people want to sell and flood some inventory in the market. Yeah. So all sorts of stuff can be a part of it. But like I said, we will know in September. And until then, you want to hope that the market hangs on to July. I am a little squirmy on how this thing looks, right? This chart especially, and then I don't know if are we wrapping up here? Like, we're kind of done? Okay.
I think, I'm done. But
I'm done. All right.
I think you're right though. The market it's way overextended. It needs to come back, but will it? Yes. But when is the question. Yep. And
look, dude, I've got an easy play for you, man. I took the trade today when we split between our first session and second session. I have a 54.40. I did it on the micro or the E-mini futures. So I traded E-mini S&P futures. The trade that I took is right here, and I have it's basically like a credit hedge is what I'm calling it. So I bought the 5,500 put. And I sold the 5,400 put. It gives me 100 points of a potential profit. And then on top of that, I'm selling a 5,100 put. So I'm giving myself this big window. That's the bear trap that I'm talking about. Price would have to drop 8.5% for this position to be threatened. But my upside is $4,000 of profit. So would I take ownership of the S&P and the futures account? No. So there's going to be risk on the trade. But for me to have credit, give myself an 8% buffer, have a downside hedge that I didn't have to pay for it at all. That's my trade. And so that's my proof right now, dude, is if nothing happens, my IRA accounts, I'm spending $275. If it goes down, that becomes $3,000 or $4,000. If my margin accounts, it goes down $3,000 or $4,000. The naked put is not really ideal, but 5,100 is way down here, man. You and I look at this chart. I could see a correction breaking this 5,400 level. I could see a correction coming back to retest all-time highs here at 267. So 5,267. But a correction is not a crash. I think the one thing that would scare everybody would be that a correction ignites to that. That puts a top in the market, dude. In my opinion, that's at the top. So that's the head and shoulders. That's the ominous pattern. That's the dead cat bounce. That's where we're in trouble in 2025. If we don't have a correction to that degree, if we just pull back here and then go higher, there you go. If we pull back here and go higher, there you go. A correction is healthy. Structure is different. If it breaks these lows or challenges those lows, I don't think we have that correction. So I say we stay the course, we keep trading. And you know what? Happy 4th of July. Take a day off. I need one, bro.
Yeah, we do. It's been honestly a long week, but
yeah,
a good one.
Good.
All right, Chris. Thanks for staying on as long as you did. I know you could go on for hours, but there's only so much time in a day, so we have to call it here. And I guess to
be continued.
Thanks to everyone watching. Happy 4th, everyone in the U.S. And Chris, I guess I'll see you on Friday.
Sounds good, man. Thanks, everybody.
Bye.
Bye.
Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our EDGEFINDER summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year.